Certain things I can't find. In the middle of the night, I'm still up, I'm still trying to decide. Should I drink up, smoke up, need some freedom, freedom high in my life? Should I drink up, smoke up, need some freedom, freedom? Show me a little attention, a little attention. Show me attention, show me a little attention, yeah. Show me a little attention. Little love and some affection this side. Little trust and some passion be nice. It's all I desire. I need it, I cannot deny. Oh, hey, I don't see something from my eyes only. You know emoji, got emoji. You know emoji. I'm my Tony. Show me a little bit dancing, a little bit dancing. Show me a dancing. Show me a little attention now. Show me a little attention. Lately I've been losing my mind. Searching things I can't find. In the middle of the night, I'm still up, I'm still trying to decide. Should I drink up, smoke up, need some freedom, freedom in my life? Should I drink up, smoke up, need some freedom, freedom? Show me a little attention, a little bit attention. Show me attention, show me a
Volume indicators. Among the many things to understand in trading, these rank high. You must not only understand when everyone is trading, but also where. And that's the issue, because most volume It seems that every week a new price action strategy pops up. Some new trend lines, liquidity grabs, Fibonacci tweaks, you name it. And let's be real, it can get overwhelming fast. But what if you had a toolkit that could cut through this noise, giving you the most critical concepts in a powerful way? Well, that's exactly why we built the Price Action Concepts Toolkit. It's not just another trading tool, it's your all-in-one system for decoding price action in real time. And by the end of this video, you'll see exactly how it works and why traders at every level are making it a must-have. Let's dive in. At its core, trading is all about price action, the movement of price over time. No matter the strategy, volume footprint analysis, TPO charts, or any other method for that matter, price action is the common thread that ties everything together. Yet mastering it can feel elusive. That's where the Lux Algo's Price Action Concepts Toolkit comes in. It takes complex market dynamics and simplifies them into clear, actionable insights. And to do this, we start with market structure. Market structure is the backbone of price action analysis. It is a simple and clear way to identify both macro and micro trends. In order for us to simplify this for traders, the Price Action Concepts Toolkit automatically plots key labels at the most important turning points in price. So let's break down how that works. An uptrend forms when the market creates higher highs and higher lows. When a higher low is broken, the toolkit plots a bearish change of character label, meaning we might be entering a bear market. Likewise, in a downtrend, when a lower high is broken, a bullish change of character appears, hinting at a possible bullish market. However, majority of the time, the trend doesn't reverse and instead continues in one direction. And that's where a break of structure label is formed. This confirms that the market is following through with the initial trend shift and is often used as a confirmation to get into trades. So to keep things visually intuitive, these labels are color-coded based on the anticipated direction of the structure change. But if you would like to take it a step further, you can also enable color candles. This will shade your chart candles based on the structure labels. Green candles for a bullish trend and red candles for a bearish trend. So that's it for structure, right?
You serious?
You see, an experienced trader knows that trends exist within trends. And this can cause you to enter a trade after a change of character or break of structure, only for it to turn out to be a retracement within a much larger move. So to help traders tackle this, we provide two versions of market structure. The swing structure is plotted with solid lines and accounts for more data, highlighting major macro moves, while internal structure identified by dashed lines uses less data and captures smaller structure fluctuations within the larger trend. By using both versions, you can confidently assess market structure and ensure your decisions to enter a trade are aligned with the broader market direction. Once we had the market structure implemented, it was time to tackle the next crucial element: support and resistance levels. These are key price zones where price is expected to react, making them essential for traders when setting stop losses or identifying target areas. Nearly every trader uses this concept in some form, with the most common approach being key swing points as reference levels. But we decided to take a different approach. Based on our research, the most effective and widely used method for detecting support and resistance levels is through order blocks. These are zones where market orders accumulate before a significant move, acting as hotspots of institutional activity. However, we didn't stop at just regular order blocks. We introduced volumetric order blocks. This enhancement not only highlights where orders are clustering, but also provides insight into buying and selling activity at those levels. Additionally, we gave users the flexibility to adjust the time frame for these levels and even detect breaker blocks, adding another layer of market intelligence. This has become one of the most popular features in our toolkit. For a deeper dive into how it was developed, check out our dedicated video on order blocks. And next, we dove into liquidity concepts. Liquidity is the heartbeat of the market. It refers to how easily a market can be bought or sold. After all, trading isn't possible without someone on the other end willing to buy or sell. So, market levels of high liquidity often end up being where traders' stop losses are placed. This creates prime opportunities for market makers. The Price Action Concepts Toolkit brings liquidity to life. Every feature within this category is built with the intent of how users can make trading decisions at these liquidity zones, because trading isn't just about identifying liquidity. It's about understanding how the market reacts to it. Let's break down the features available. First, we have liquidity trend lines. These dynamic zones adapt to real-time liquidity readings. Zones will only appear when market participants have actively sought liquidity there. Traders use these areas as reaction points, either to continue an existing trend or wait for a break to spot potential reversals. And then we have pattern detection. The toolkit identifies a number of bullish and bearish chart patterns in real time. To make decision-making easier, there is also a dashboard displaying the name and type of pattern detected. For instance, if a descending triangle appears, the first thing to note is that this is a bearish pattern. It signals sellers attempting to push prices lower. A trigger for this setup is waiting for the support to break and for the price to start closing below that zone before considering a trade. We also have the equal highs and lows feature, which highlights market areas that are at relatively the same level. These are most significant when they occur in well-established and clear uptrends or downtrends because they can mark the very top or bottom of the market. Once one is detected, the idea is to wait and see if it is followed by a market structure shift in the opposite direction of that trend, making them perfect for an early warning sign of a reversal. Liquidity grabs, Fibonacci tweaks, you name it. And let's be real, it can get overwhelming fast. But what if you had a toolkit that could cut through this noise, giving you the most critical concepts in a powerful way? Well, that's exactly why we built the Price Action Concepts Toolkit. It's not just another trading tool, it's your all-in-one system for decoding price action in real time. And by the end of this video, you'll see exactly how it works and why traders at every level are making it a must-have. Let's dive in. At its core, trading is all about price action, the movement of price over time. No matter the strategy, volume footprint analysis, TPO charts, or any other method for that matter, price action is the common thread that ties everything together. Yet mastering it can feel elusive. That's where the Lux Algo's Price Action Concepts Toolkit comes in. It takes complex market dynamics and simplifies them into clear, actionable insights. And to do this, we start with market structure. Market structure is the backbone of price action analysis. It is a simple and clear way to identify both macro and micro trends. In order for us to simplify this for traders, the Price Action Concepts Toolkit automatically plots key labels at the most important turning points in price. So let's break down how that works. An uptrend forms when the market creates higher highs and higher lows. When a higher low is broken, the toolkit plots a bearish change of character label, meaning we might be entering a bear market. Likewise, in a downtrend, when a lower high is broken, a bullish change of character appears, hinting at a possible bullish market. However, majority of the time, the trend doesn't reverse and instead continues in one direction, and that's where a break of structure label is formed. This confirms that the market is following through with the initial trend shift and is often used as a confirmation to get into trades. So to keep things visually intuitive, these labels are color-coded based on the anticipated direction of the structure change. But if you would like to take it a step further, you can also enable color candles. This will shade your chart candles based on the structure labels. Green candles for a bullish trend, and red candles for a bearish trend. So that's it for structure, right?
You serious?
You see, an experienced trader knows that trends exist within trends. And this can cause you to enter a trade after a change of character or break of structure, only for it to turn out to be a retracement within a much larger move. So to help traders tackle this, we provide two versions of market structure. The swing structure is plotted with solid lines and accounts for more data, highlighting major macro moves, while internal structure identified by dashed lines uses less data and captures smaller structure fluctuations within the larger trend. By using both versions, you can confidently assess market structure and ensure your decisions to enter a trade are aligned with the broader market direction. Once we had the market structure implemented, it was time to tackle the next crucial element: support and resistance levels. These are key price zones where price is expected to react, making them essential for traders when setting stop losses or identifying target areas. Nearly every trader uses this concept in some form, with the most common approach being key swing points as reference levels. But we decided to take a different approach. Based on our research, the most effective and widely used method for detecting support and resistance levels is through order blocks. These are zones where market orders accumulate before a significant move, acting as hotspots of institutional activity. However, we didn't stop at just regular order blocks. We introduced volumetric order blocks. This enhancement not only highlights where orders are clustering, but also provides insight into buying and selling activity at those levels. Additionally, we gave users the flexibility to adjust the time frame for these levels and even detect breaker blocks, adding another layer of market intelligence. This has become one of the most popular features in our toolkit. For a deeper dive into how it was developed, check out our dedicated video on order blocks. And next, we dove into liquidity concepts. Liquidity is the heartbeat of the market. It refers to how easily a market can be bought or sold. After all, trading isn't possible without someone on the other end willing to buy or sell. So, market levels of high liquidity often end up being where traders' stop losses are placed. This creates prime opportunities for market makers. The Price Action Concepts Toolkit brings liquidity to life. Every feature within this category is built with the intent of how users can make trading decisions at these liquidity zones. Because trading isn't just about identifying liquidity, it's about understanding how the market reacts to it. Let's break down the features available. First, we have liquidity trend lines. These dynamic zones adapt to real-time liquidity readings. Zones will only appear when market participants have actively sought liquidity there. Traders use these areas as reaction points, either to continue an existing trend or wait for a break to spot potential reversals. And then we have pattern detection. The toolkit identifies a number of bullish and bearish chart patterns in real time. To make decision-making easier, there is also a dashboard displaying the name and type of pattern detected. For instance, if a descending triangle appears, the first thing to note is that this is a bearish pattern. It signals sellers attempting to push prices lower. A trigger for this setup is waiting for the support to break and for the price to start closing below that zone before considering a trade. We also have the equal highs and lows feature, which highlights market areas that are at relatively the same level. These are most significant when they occur in well-established and clear uptrends or downtrends because they can mark the very top or bottom of the market. Once one is detected, the idea is to wait and see if it is followed by a market structure shift in the opposite direction of that trend, making them perfect for an early warning sign of a reversal. And finally, for this category, we have liquidity grabs. This is an advanced way of potentially identifying market manipulation. This feature first identifies liquidity zones and then detects any unusual price action within those areas. If such activity is detected, a bullish liquidity grab appears in blue, while a bearish grab appears in red. This often indicates that the market could start moving strongly in either direction of the grab. If both occur in relatively the same area, it could indicate a higher likelihood of a ranging market, in which case you should avoid trend trading strategies. Now that we have a solid understanding of liquidity concepts, it's time to tackle another crucial category: imbalances. These often occur as price moves toward or away from liquidity areas, creating gaps where supply and demand becomes unevenly distributed. These imbalances in the market will need to be corrected, and as such, they can act like magnets, pulling price back to fill these voids. So, recognizing the importance of imbalances, we didn't just implement one. We integrated 5 of the most significant types. This includes 3 major types of fair value gaps, volume imbalances, and opening gaps. Simply select the ones you want, and they'll be instantly highlighted on your chart. As mentioned earlier, price reacts to these zones much like a magnet to metal, making them ideal levels to set targets or to place your stop loss. If being used as an entry method, traders will often wait for a reaction off these key levels before executing the trade. Many of these trades will take place between surplus and deficit zones. To navigate these areas effectively, you need a way to identify these areas. This is where the premium and discount feature comes in. The premium and discount tool simplifies this by dividing the market into overbought, premium, and oversold, discount areas, giving you a clear visual representation of whether price is trading at a favorable level for entry or exit. On top of this feature, there are many psychological levels in trading that are widely used in price action strategies. Traders can enable key price levels such as Monday's high and low, previous monthly levels, and other significant reference points. Additionally, we've recently introduced a Fibonacci tool, but we took it a step further than a standard implementation. Instead of simply plotting fixed retracements, we allow traders to anchor Fibonacci levels between major points on the chart, using almost any feature within the toolkit. Whether you want Fibonacci levels drawn from the premium and discount zones, or between the high and low of an imbalance, the possibilities are endless. So now that we've explored all the features of the price action concepts, let's talk about the glue that ties everything together: alerts. Staying ahead in the market is all about timing, and we've made sure our alert system covers every angle to keep you informed when it matters most. The toolkit offers 4 types of alerts: pre-built alerts, ready to go for a quick setup; any alert function calls, perfect for combining multiple features into a single customizable alert; custom alert creators, offers more flexibility in combining alerts and introduces the ability to set alerts based on sequences. The all-new alert scripting feature allows you to build alerts from the ground up with ultimate flexibility, perfect for advanced users. Because alerts are such a game changer, we've dedicated full-length videos to breaking down each alert type in detail, showing you exactly how to set them up and optimize them for your trading strategy. So no matter what kind of trader you are, you'll always be in the loop and ready to act. Now you can see that what sets the Price Action Concepts toolkit apart is that this isn't just a collection of features. It's a thoughtfully designed system that simplifies your analysis and helps you trade more effectively, from identifying market structure to spotting liquidity zones, imbalances, and key levels. Everything is designed to give you a comprehensive view of the market. You can access this toolkit directly on our website at luxalgo.com. It's included in all 3 of our plans: Essential, Premium, and Ultimate. If you opt for the Ultimate plan, you unlock even more powerful features. You'll gain access to the Price Action Concepts backtester, allowing you to fully backtest every feature within this toolkit, and exclusive access to the first-of-its-kind AI backtesting assistant, an intelligent platform that understands the Price Action Concepts toolkit inside and out, helping you uncover the most profitable strategies this toolkit has to offer by simply asking questions within the interface. We hope you enjoyed this video and learned something new. Thank you for watching, and until next time. These are some of the most advanced overlays and signals ever created on TradingView, refined and optimized through years of testing, real-world experience, and input from some of the sharpest minds in day trading. This toolkit is packed with powerful features, including proprietary machine learning algorithms for trend and contrarian confirmations, dynamic adaptive overlays, automatic take profit and stop loss calculations, and so much more. But here's the thing: to unlock the full power of this tool, it's more than just knowing the features are there. You need to know exactly how they're designed to be used, and that's what today's video is all about. The best practices and pro-level tips to help you absolutely crush the markets, no matter your experience level or trading style. At the core of the Signals and Overlays toolkit are the confirmation and contrarian signals, designed not to blindly tell you when to enter, but to confirm the strength or a reversal of a trend based on current market conditions. Trend confirmation mode is ideal for trend-following strategies, helping you stay on the right side of the market when momentum is strong. Contrarian mode, on the other hand, is built to spot potential tops and bottoms, making it a perfect fit for mean reversion strategies or traders looking to fade extreme moves. To get the most out of your signals, we strongly recommend enabling the ML classifier. ML, short for machine learning. With this activated, every signal gets a confidence rating, giving you a clear sense of how strong or weak it is so you can better align it with your trade setup. This is hands down one of the most popular features in the entire toolkit, and we've even created a dedicated video that breaks down the ML classifier in full detail. Now, to truly maximize your signals, you'll want to combine them with candle coloring. These two work hand in hand. Let's say a signal rated 2 appears. This typically means you're seeing a retracement in an already established trend. But here's the twist. Not every retracement will stay a retracement. Sometimes that same signal can trigger a full-blown reversal. So how do you know which is which? This is where candle coloring becomes your secret weapon. When a signal 2 first appears, the candles will usually be purple, which is your visual cue that the trend is currently weak. As long as those candles stay purple, you have time to perform deeper technical analysis within that zone to spot the ideal entry point to continue your trade in the overall trend direction. For example, if you notice a higher low forming within the purple zone, you can wait for price to break above those purple candles before considering a buy trade to continue the trend. On the flip side, if a signal 2 shows up, but the candles start transitioning from purple to red, that's your warning sign. This could mean momentum is rapidly building in the opposite direction. This simple color shift gives you a visual roadmap to gauge the market's transition between trends, helping you avoid jumping in too soon or getting caught on the wrong side of the move. The key takeaway: never follow signals blindly. Signals are just the starting point. It's your job to confirm them using the candle colors and your own analysis. Now, what about signals rated 3 or 4? Should you enter the trade immediately? You can, but only if it aligns with your overall analysis. There's no need to rush into a position just because a signal is there. As long as the candle colors are still green, you can perform your analysis within that green zone to identify the best possible entry point. Now, there are also exits plotted which are based on the last signal generated. These exit highlight points in the market where the toolkit suggests caution. You may want to use them to close partials or anticipate a pullback. They're available in both confirmation and contrarian mode. Now, if you're scalping and you want a bit more granularity when it comes to transitions, the gradient candle coloring is available. This is an advanced, highly detailed candle coloring system, so we usually recommend it for more experienced traders. That said, for scalpers, this mode is a game changer, giving you a crystal clear view of those subtle shifts and micro deviations in the trend. The gradient coloring is also available in contrarian mode, but here the colors take on a different meaning. Green areas indicate potential oversold zones, red highlights possible overbought zones, and purple represents neutral or balanced conditions. This combination of ML confidence ratings, candle coloring, and your own analysis is what separates smart trades from impulsive ones. Now, looking beyond the signals and candle coloring, this toolkit also includes 5 additional overlays at the time of this video. Let's break down what each one is designed for. First up, we have the Smart Trail, also a very popular feature of this toolkit. The Smart Trail was designed as a dynamic trailing stop for entries, adapting in real time to account for volatility. You can enable the Smart Trail to help you gauge whether you should exit your trade early before hitting take profit or stop loss. Unlike traditional trailing stops, the Smart Trail dynamically adjusts and pulls closer or moves away from price as it develops. Because of this unique behavior, you'll often see price bounce directly off the Smart Trail, which is why many traders also use it as a potential entry point. Next up, we have the reversal zones, a powerful tool for identifying the expected range in which price is likely to trade. There are a few different ways you can apply this feature in your trading. One common approach is to use it as a guide for exiting your trades. For example, if you're trading from the upper reversal zones and aiming for a take profit to the downside, you might want to reassess your position as price approaches the lower zone. If your target falls beyond the lower zone, it could make sense to either take partial profits or tighten your stop loss as price enters the reversal zone, since based on the data, this is where reversals often occur. Because of its nature, the reversal zones are best suited for contrarian strategies. However, you can also adapt them to trend trading if you know how to read them correctly. In strongly trending markets, the reversal zones may lose some of their value, so you might want to rely on other overlays instead. If you choose to use the zones in a trending environment, you can gauge momentum by watching the candle colors. When price stays within the upper or lower zones and candles remain green for bullish trends or red for bearish trends, it's often a sign that momentum is still strong. But if the candles flip back to purple, that could indicate weakening momentum and signal a good time to exit. Now, you might be wondering, how do you know if the market is trending or ranging? That's where the dashboard comes in. The dashboard includes a feature that highlights current market sentiment, helping you decide which overlays and features are most relevant for the conditions. We'll cover the dashboard in more detail later in the video. The next overlay is the Trend Catcher. And just like the name suggests, this feature is all about catching trends extremely early. Forget waiting for confirmations. This one is designed to react fast and get you in first. The trend catcher is highly responsive while still filtering out some market noise. You'll notice cases where the market appears to be trending steadily, and then a single unusual candle can trigger a reversal from the trend catcher. This can be incredibly powerful if used correctly, but because of its reactive nature, we don't recommend relying on it as a standalone feature. Instead, many traders use it alongside their main entry strategy to help filter if it's a good time to enter. It's also perfect for those moments when you have a strong intuition about a setup but can't quite pinpoint the ideal entry. In those situations, the trend catcher can be your best friend, helping you spot early opportunities before they fully develop. Following the trend catcher, we have the trend tracer, a similar tool but much less reactive. While the trend catcher focuses on early signals, the trend tracer excels at identifying the overall trend direction and highlighting stable price points within that trend. This makes the trend tracer especially useful for trend-following strategies. For example, in a bullish trend, you might consider buying when price dips below the tracer, holding the position as long as price stays above it, and then exiting once price starts closing below the tracer again. It's a versatile tool that helps you gauge both trend stability and potential reversals, giving you a more balanced view of the market compared to the faster, more reactive trend catcher. The final overlay is the Neo Cloud, designed specifically for swing traders and longer-term position traders who want to enter positions and hold them for extended periods. Unlike the trend catcher or trend tracer, the Neo Cloud doesn't plot a single line. Instead, it creates a dynamic zone. In a strong trend, in this case, a bullish trend, the lower boundary of the cloud will steadily trend higher, signaling ongoing strength. However, the upper boundary can occasionally plot lower than the previous level. When this happens, it's often an early warning sign that the trend may be losing momentum. The entire toolkit is heavily centered around discretionary analysis, meaning there's no single right way to enter or exit a trade. Because of that flexibility, we designed the Take Profit and Stop Loss feature to work with any of the signals or overlays you choose to trade with. In the Take Profit and Stop Loss section, you'll find a drop-down menu where you can select which feature the levels should be based on. For example, if you choose the Smart Trail, the moment the Smart Trail changes direction, the system will automatically plot both Take Profit and Stop Loss levels. There's also an option to base your levels on the Custom Alert Creator. Combined with the alert scripting feature, this is an incredibly powerful system that allows users to create fully customized alerts for virtually any setup they can imagine. Since these are advanced features, we've created 2 dedicated videos that walk through exactly how to use them. If you haven't already watched those, we highly recommend checking them out to unlock the full potential of these tools. Now, looking back at the signals and overlays, you'll notice that each one comes with a sensitivity setting that you can adjust. This directly controls how reactive the feature is to market data, giving you flexibility to fine-tune it to match current conditions. For the confirmation and contrarian signals, the dashboard offers valuable guidance to help you choose the right sensitivity value. One of the most useful metrics is optimal sensitivity, which analyzes recent price action and automatically calculates the ideal setting for the current market environment. You can simply enter this recommended value into the sensitivity panel to optimize your signals for better performance, or, if you prefer a more discretionary approach, you can manually assess the price action and adjust accordingly. For example, when using the Smart Trail, you can observe how sharp or smooth the current market swings are, then cycle through different sensitivity values until you find one that fits well with the current volatility. This way, if you're using the Smart Trail as a trailing stop, you can be confident that it's properly calibrated to the conditions you're trading in. Beyond that, the dashboard also provides additional insights, including trend strength, volatility, squeeze metric, and volume sentiment. These can all be used to further optimize your overlays. The trend strength reading quantifies the strength of an underlying trend as a percentage, helping traders determine whether the market is trending or ranging. A fire emoji signifies a trending market, while a snow emoji indicates a ranging market. The volatility reading assists users in identifying periods of high and low volatility, allowing for better placement of stop losses. An upward trending chart appears when volatility is rising, while a downward trending chart signals declining volatility. The squeeze metric is a unique tool for detecting when the market is compressing into a tight range, distinct from a ranging market. Once the squeeze reaches 100%, an explosive move is likely to follow. Finally, volume sentiment estimates whether most of the volume within a candle comes from buying or selling participants. And for the ultimate optimization, you can leverage the backtester, which is included in the ultimate plan. The backtester allows you to test any feature in the toolkit against historical data, helping you identify the best performing settings based on long-term behavior. We hope you enjoyed this video and picked up some valuable insights about the toolkit. If you don't have access yet and want to give it a try, You can get 30 days risk-free over at luxalgo.com. Thanks for watching, and we'll catch you in the next one. Today, we're about to show you an indicator that's so innovative. It doesn't just show volume, it translates it. It spots divergences, tracks surging money flow, and even reveals when the latecomers are piling in, giving you an edge before the crowd even knows what hit them. If you're still analyzing the market without understanding volume, you're trading blind. Volume isn't just noise, it's the heartbeat of every move the market makes, and this tool will flip your analysis on its head. The indicator is called the oscillator matrix, and it's built from 5 powerful components: smart money flow, hyperwave divergences, reversals, and confluence calculations. Let's start with the engine behind it all: smart money flow. Money flow and liquidity are the lifeblood of any market, and in the oscillator matrix, they're front and center. The smart money flow feature is designed to detect emerging trends based on the activity of real market participants. When green waves appear, it signals money flow is increasing in the market. Red waves, money is flowing out. But here's where it gets next level. By analyzing the angle of those waves, you can gauge whether buying or selling interest is accelerating or fading. To make that even clearer, this feature includes a threshold system. Above and below the 50-level baseline, you'll see threshold markers that indicate extreme conditions. When money flow rises above the upper threshold, it's a sign of heavy one-sided bullish activity. But when it drops below the lower threshold, you're looking at intense bearish activity. Now here's the thing. When money flow reaches those extremes, the market often kicks into a powerful trend. But we all know the danger that moment can bring. Sometimes by the time momentum kicks in, it's too late to enter, and a reversal could be lurking. That's why we also built in the overflow feature. Overflow occurs when excessive liquidity floods into a trend over a short period. It's often a sign that late traders are chasing the move, and that the trend might be nearing exhaustion. If you're already in a position backed by your analysis, that's your cue to hold, not chase. If you're still on the sidelines, wait for the overflow to fade before making your move. If necessary, you can go into the settings of the money flow and increase or decrease the length to have it more aligned to your type of analysis. Higher values will be more indicative of longer-term money flow analysis, while lower values for shorter-term analysis. While smart money flow and its supporting components focus on volume and liquidity to gauge market interest, you still need clear, actionable triggers to enter and exit trades. That's where the hyperwave comes in. The hyperwave is a normalized, adaptive oscillator designed to capture price trends with precision, without all the noise that plagues traditional indicators. It's your go-to tool for spotting both trends and reversals, and it's made up of 2 components: the hyperwave line and the signal line. The signal line is your trigger mechanism. It can be configured as either a simple moving average or a trailing stop function, and when it crosses above or below the hyperwave, a small dot is plotted, highlighting potential turning points. These crosses are often extremely early signals of trend shifts. On the oscillator matrix, you'll also notice dashed lines at the 80 and 20 levels. These represent overbought and oversold zones. If a hyperwave cross occurs within these extreme zones, a large turning point dot appears, marking a high-confidence reversal signal. When you combine this with your smart money flow analysis, you're no longer guessing. You're pinpointing high-probability trades earlier and with more precision than ever before. Now that we've introduced the hyperwave, you'll start to notice something subtle but critical within the oscillator matrix: divergences between price and the hyperwave. The oscillator matrix includes real-time divergence detection between hyperwave signals and price action. But here's what sets it apart. Most divergence indicators calculate after the fact, often several bars too late, by which time the move is already halfway done. Ours doesn't wait. These divergences appear in real time. No delays, no lag, just pure, actionable insight exactly when you need it. You can adjust the sensitivity of the divergences to see more or less, and we also added a feature to display these divergences directly on the chart, so you can compare the price to the divergence detected, making it easy to incorporate into your chart analysis. This is the icing on the cake. You can now analyze volume and liquidity to understand market flow, spot ultra-early entries at key turning points, and detect shifts in direction before they're even on most traders' radar. Every feature is crafted by real traders, designed for one purpose: to help you capitalize on your edge with precision. And if you thought that was the end of it, think again. We pushed the limits even further with this toolkit. With so many powerful features working together, we knew there had to be a clear, visual way to interpret their collective signals. That's why we introduced the confluence features. Here's how they work. We have the upper and lower confluence zones. When both the hyperwave and money flow features signal an uptrend, the upper zone is shaded deep green, indicating strong bullish confluence. If only one shows bullishness, the upper zone appears in light green, signaling moderate agreement. The same logic applies to the lower zone during downtrends, using shades of red to reflect bearish confluence. This gives you an instant read on how aligned the core features are at any moment. No second guessing required. But that's not all. The confluence zones measure only two components, so we built something even more powerful, the confluence meter. When enabled, this meter takes into account not just hyperwave and money flow, but also the signal line, divergences, and overflow conditions. A higher meter reading means multiple elements are confirming a strong bullish trend, while a lower reading suggests a powerful bearish alignment. It's the fastest way to see the full story of market sentiment at a glance. And for our final major feature, let's talk about reversals. While reversals can often be identified using tools like hyperwave turning points, overflow exhaustion, or divergences, those are all trend-based methodologies. We wanted to go a step further and build a feature specifically for traders focused on spotting reversals directly. So, if you look above or below the confluence zones, you'll notice small dots or large triangles. These are your reversal signals. When a small dot appears, it usually signals a minor retracement within an existing trend. It's a softer heads up. But when you see a large triangle, pay close attention. These indicate a potential major reversal, and often appear just before significant market turning points. It's a layer of early warning, designed specifically for reversal-focused traders. And there you have it, every component of the oscillator matrix working together in one seamless, intuitive, and powerful toolkit to help you dominate your market analysis like never before. And now that we've introduced all these features, let's go ahead and show you some examples of how you can combine all these features in your analysis to truly get the most out of this toolkit. Now, looking at this price action, the first thing that stands out is the bright green confluence zone. That's your signal that multiple features are aligned in support of this uptrend. But let's break it down even further. Notice how smart money flow consistently made higher highs, each time pushing through the thresholds with strength. That's a clear sign of ongoing buying interest in the market. However, take a closer look. We're also starting to see signs of overflow. Now, remember, overflow doesn't guarantee a reversal. What it does tell us is that late trend participants are jumping in. Entering a trade at this stage carries higher risk, as these are often followed by retracements or even full reversals. And that's exactly what played out. As the overflow signal dropped off, we didn't see an immediate reversal, but a sharp retracement. At the same time, the hyperwave, which had been trending higher, made a notable swing to the downside, ending that strong momentum to the upside. But despite that, money flow was still rising, so buyers were still interested at this point. But then, another divergence was detected. Another strong sign of the market starting to diverge from the uptrend, and a reversal could be imminent. We also have a strong hyperwave signal triggered within the overbought zone. And also notice that we are below the strong reversal signal and the buyer's overflow falling off once again. The market is clearly getting weaker, but to put the nail in the coffin, look at the money flow. Whereas before we were consistently testing and breaking the thresholds, now we're failing to even reach them. And if you mark the previous high in money flow, you'll see we've begun forming lower highs. More sign that buying interest is fading. And right on cue, the market followed with a massive sell-off from those highs. Let's look at another example. In this example, we're looking at a downtrend, and it becomes clear once you examine the money flow. Mark the lows, first, second, and third. Each dip pushes deeper into the threshold, confirming strong selling pressure. But here's the key moment. On that third low, we begin to see overflow. That's our warning sign. Late sellers are entering, and jumping in here would be risky. As expected, the market follows with a retracement, a temporary pullback, as the overflow fades. Now take a closer look at the hyperwave. Notice how it's crossing above the 50 line, while selling interest remains and no overflow is present at this turning point. That's your perfect opportunity to enter a trade. Clean signal, low noise, and strong timing. As the downtrend continues, another overflow signal appears. But thanks to the early hyperwave entry, you're already positioned, avoiding a late, high-risk entry. This is a textbook example of feature confluence, multiple signals aligning to help you time your trades with precision. And these are just two of the many ways you can approach market analysis with the oscillator matrix. The possibilities? Endless. With a toolkit this powerful, alerts are essential, and we've got you covered. The oscillator matrix supports everything from pre-built alerts to fully customizable scripting. Whether you want to catch real-time reversals, divergence signals, or trend confirmations, the alert system ensures you'll never miss a key opportunity. We've created dedicated walkthrough videos on how to set up and maximize these alert features. So if you haven't seen those yet, We highly recommend checking them out. We hope you enjoyed this breakdown and gained valuable insights into the oscillator matrix, a true game changer in market analysis. If you're ready to take your trading to the next level, you can get 30-day risk-free access to this toolkit, along with the signals and overlays toolkit and the price action concepts at luxalgo.com. Thanks for watching, and as always, trade smart, stay sharp, and we'll see you in the next video. For the past few months, we've been on a mission, not just to refine our AI platform, but to completely reimagine what's possible for traders. And today, we're unveiling something that changes everything. First, we'd like to introduce Lucid, the LuxAlgo Universal Conditions Identifier. For the first time ever, users will now be able to effortlessly create strategies that combine components from all three of our main toolkits: signals and overlays, price action concepts, and the oscillator matrix toolkits. This isn't just a new feature. It's a breakthrough in strategy replication and synergy. Previously, users could only create strategies using the features of one toolkit at a time, while relying on external sources to access limited elements from the other toolkits. Now, with Lucid, you'll be able to access all strategy trigger placeholders from each toolkit at once. For our backtesters, this means we've completely reimagined the approach users take when creating strategies. We've now implemented strategy scripting, where users can combine each toolkit using the Lucid connector, which is now fully possible directly within each backtester. You can now build trading strategies with a level of complexity never before possible, either on TradingView directly or with our AI platform first, making the search for a real trading edge using the best toolkits available on the platform easier than ever before. But we didn't just stop there. Our AI platform now boasts tens of millions of strategies. We've listened, and one of the biggest roadblocks users mentioned was manually recreating conditions in TradingView. Well, we're happy to announce that using our alert scripting framework, strategy reproduction has become much faster, smarter, and more accessible. With just one click in our AI platform, users can now copy strategy conditions from the AI and seamlessly paste them into the backtester on TradingView to recreate strategies in seconds. Plus, the AI now supports advanced strategies that combine all three toolkits for even more powerful results. So let's take a look at how it all works. The AI interface remains intuitive and easy to use. Simply go to luxalgo.com, log into your profile, and click on the AI chat option. This takes you directly into the platform where you can request strategies for over 90 tickers, spanning stocks, ETFs, crypto, forex, commodities, and futures. The AI's ability to interpret user input has been significantly improved. It now intelligently prompts for additional details to ensure the strategy it returns matches your request more accurately. Once a strategy is generated, you can view its performance metrics, equity curve, and a full breakdown of its conditions directly within the platform. If you like what you see, just click the star icon to save the strategy to your profile. It will then appear in the sidebar under Save Strategies, where you can track performance over time, including automatic updates with new trades and revisit its setup conditions at any time. Now, here's where the latest update changes everything. Previously, users had to manually input all the strategy conditions to recreate them. But now, with a single click on Replicate Strategy on TradingView, the platform guides you through a streamlined step-by-step process where you'll receive a ready-to-copy and paste strategy script tailored for TradingView. So let's follow these steps. Simply head over to TradingView, switch to the correct ticker and time frame, add the relevant backtester and toolkits, as specified in the instructions. Then, if used in the strategy, navigate to the Lucid Connectors section in the backtester. Select the required connectors and then paste in the provided script. And just like that, your strategy is live. From there, you can set alerts or automate the strategy using third-party platforms. And of course, strategy scripting within the backtesters can still be used to create fully custom strategies from the ground up, without relying on AI. Full details on available placeholders and proper syntax can be found in the documentation on our website at luxalgo.com. We've also significantly improved the consistency between the results shown on our AI platform and those generated on TradingView. However, in some cases, you may notice slight discrepancies. If you do, please don't hesitate to report them in our Discord community. To get access to the AI platform, our backtesters, and the new Lucid connectors with copy and paste AI strategy replication onto TradingView, it's available through our Ultimate plan. This is a new era of AI-driven backtesting, and we're proud to help shape the future of technical analysis. We can't wait to see how you'll use it. Thank you for watching.
Guess who's been named which cheapest supermarket? It's Aldi!
This is the most powerful and advanced backtester on TradingView. At LuxAlgo, we have three main toolkits: the signals and overlays, the oscillator matrix, and the price action concepts. The most frequent questions we get about these toolkits are, do they actually work? What's the win rate? How can we test it for ourselves? That's why we've developed not one, but three cutting-edge systems to backtest every element of each indicator, pushing the bleeding edge of what's possible on TradingView and uncovering extremely powerful and never-before-seen strategies. Today, we're giving you a step-by-step walkthrough of the signals and overlays backtester and explaining all the functions made available right at your fingertips. So let's get right into it. When you're going to backtest a strategy, the first thing to consider is how much data you would like to use in your backtest. This is extremely important because if you use a small amount of data to test or develop a system, it may trick you into thinking your strategy is profitable, when in reality it is not. So, when backtesting, we recommend having at least 100 trades. But the more data you have, the closer you will come to uncovering a strategy's true performance. The backtester allows you to use a certain number of bars, start from a specific date, or use the entire history. If you decide to use the bars option and you input 3,000, it will only backtest using the last 3,000 candles. If you choose the date option, you can select the exact year, month, and day you would like to start and end your backtest. Entire history, as the name suggests, will use the entire history that can be seen for that ticker on TradingView. But it also allows you to use TradingView's deep backtest feature, which can pull data far beyond what you can see on the chart. Once you've decided when you would like to start your backtest, we'll then need to set up our strategy. Now, the way the Signals and Overlays toolkit primarily provides signals is through the trend confirmation or contrarian modes. These signals can be adjusted to be more or less reactive with the sensitivity input or the autopilot feature. If you are not using the autopilot feature, a dashboard with a list of sensitivity values will be shown, which shows you how well each value performed. We'll cover this feature in more detail later in this video, but this is where you would choose what value to input into sensitivity. Now that we've chosen the sensitivity of our signals, we can move on to setting up the details of our long and short trades. You can enter trades not only based on the main confirmation or contrarian signals, but also based on any of the 5 overlays from the indicator. Here's an example of a trade setup. If you want to enter based on the smart trail, you must first disable the signal type, then enable the smart trail. You can then use the dropdown to tell the system when you would like to take the entry from the smart trail, and we'll use a switch up or down. Now the indicator will take an entry when the smart trail is switching directions. Just like this, the other options also have a similar dropdown, allowing you to choose exactly how you want to use each feature. It is important to note that if you have more than one entry condition selected at a time, they may act as filters. In this example, we have confirmation signals, but we also have the smart trail enabled and set to bullish. This means that a trade will only be taken if the smart trail is bullish when a signal is detected. We can even take it a step further and set the signal to bullish classifier and input values 2, 3, and 4. This way, a trade will only be taken if the smart trail is bullish when a signal is detected, and only if that signal is rated a 2, 3, or 4. Ignore if it's a 1. The trend strength feature from the dashboard is also available. This is a great way to filter out trades in consolidating markets. We can set the reading to be greater than or lower than a certain value before a trade is taken. The session options allow you to choose specific times to enter trades. For example, if I am backtesting the entire year of 2021, but only want to enter trades between 4 a.m. and 5 a.m., we can set that here. And now notice trades are only taken during this time period. We also have access to what is called external sources. We have 3 external sources, and they allow you to use your own indicators as part of the strategy. For example, here we have the MACD indicator alongside the Signals and Overlays toolkit. If we wanted to backtest confirmation signals, but only when the signals appear during a bullish MACD reading, which is when the MACD line is greater than the signal line, we can easily do that using the external sources. So for the first option, we select the MACD line, then for the conditional operator, we select greater than, and for the final field, we select the signal line. This now reads, MACD line must be greater than signal line, and since we also have our signal type enabled, it will act as a filter, causing trades to only be taken if the MACD is bullish. One of these 3 external sources allows you to input a specific value, and that field also accepts placeholders such as close, high, and low. For the external source to work, you must have your external indicator on the chart, and the indicator must provide a plot for the signal you want to use in the backtester. Now, by default, when a trade is taken, the trade will remain open until another is detected. But if you would like to ignore new signals until you reach take profit or stop loss, then you can enable this feature to don't allow trade until closed. Speaking of take profit and stop loss, our next section covers setting stop loss and take profit options. The system provides a number of ways to set profit or stop loss. You can set your stop loss to a specific price, currency amount, a certain number of ticks, percentage, ATR value, or a trailing stop loss. The take profit options are the same, except instead of a trailing stop, you have a forecast option. The forecast option is an advanced feature that looks at the performance of past trades and determines the most likely take profit zone based on past performance. The trailing stop feature is based on percentage, and if enabled, it will trail the price, preventing you from giving back profits as it moves in your direction. If I want to set my trade to have a 1-to-2 risk-to-reward ratio, I can simply select my stop loss feature, for example, ATR with a value of 1. Then, if my take profit is also set to ATR, I can set that to a value of 2. The value inputted in the box acts as a multiplier for the value returned by the option selected, and if you have plot take profit and stop loss enabled, you can see them visually on your chart. External sources also make a return here, allowing you to use external indicators as take profit or stop loss triggers. It functions just as we showed you before. However, when using an external source, you will be able to close partials. For example, once a take profit condition is met, instead of closing 100% of your trade, you can close 50% and allow the rest to run. You can also do this with built-in exits provided by the Signals and Overlays toolkit and the exit long and short time, which allows you to close partials or the full trade at a specific time on the chart. And our final exit options are exit on signal and exit on entry. If exit on signal is enabled, it forces the system to exit a position once a confirmation or contrarian signal is detected, and the exit on entry option forces an exit when a new position is detected. We also have the overlay settings, which allow you to adjust how reactive each overlay is to price data. This is very useful as it helps us adapt to different market conditions to find what works best. Just make sure to copy these settings to the Signals and Overlays indicator as well. That way, you'll be able to see the changes on the chart. We also have settings for the forecast feature. When the forecast is enabled, the way you can think about it is if the projected forecast is in the same direction as your trade, it might have a higher chance of being accurate. This can also help you determine where to potentially place your stop loss if executing trades manually. Below that, we have the optimizer. This optimizer works alongside the advanced optimization dashboard. The optimization dashboard provides a quick overview of which settings will give you the best performance on the asset, allowing you to fine-tune the indicator based on your desired outcome. The dashboard returns information such as the number of trades taken, win rate, profit factor, maximum drawdown, potential ratio, and which sensitivity value yields the best performance. If we want to test more sensitivity values, we can simply increase the range of values here. By default, the dashboard is set to find the sensitivity value that returns the highest profit, but we can adjust that to prioritize any of the other stats available on the dashboard. The entry price area feature allows you to see the running P&L of an active trade, where red indicates when the trade is in drawdown and green shows when it is in profit. This allows you to visually see how long your trades typically remain in drawdown before moving into profit. And finally, you will find the long alerts messages and short alerts messages options. This feature allows the backtester to trigger an alert when any of these conditions are met. The entry message triggers when your long or short entry conditions are met, and the exit message will trigger when you exit a trade based on a signal or built-in exits. The trailing stop and stop loss options will alert you when the stop loss or take profit levels are reached, and the TS option will alert you when the trailing stop causes an exit. The exit long take profit and stop loss will provide an alert if you are using external sources for take profit and stop loss. Now that we've gone over all the features within this backtester, let's quickly go over how you can use these features together to backtest a new strategy. Now, we can, of course, create a new strategy to backtest, or we can easily find a strategy that is already performing well using the AI backtesting assistant. If we go to the AI assistant, we can let the AI know what asset we're trading, what time frame we would like to trade, and what features we'd like to use. With this, we can pull from thousands of strategies to find one with a low drawdown or a high win rate. Maybe we want over 1,000 trades. There is so much we can get using this AI. It will provide all the details we need for the backtester, such as the entry conditions and start date, and we can just input those and start optimizing our strategy. But of course, we can also create a strategy from the ground up on any market, and it's also super easy to do. Here's how we'll approach it. Here, we're looking at a random asset, and we can see that the strategy's performance by default is not very great. However, we also see that this backtest is based on a small amount of trading data. So we'll increase the number of bars to ensure at least 100 trades in our backtest. Now that we have a larger sample size, we can begin improving our strategy, as it is still clearly underperforming. We'll continue using the signals for entries, but a good starting point is checking the dashboard to see which sensitivity value is suggested as the best based on these market conditions. After inputting that value, we now have a slightly better performing strategy. Now, it's usually a good idea for your strategy to have a fixed stop loss, or a trailing stop. So we'll head to the take profit and stop loss options and set a trailing stop to limit the drawdown and secure profits as the trade moves in our favor. As I input different values, notice that the suggested sensitivity value in the dashboard changes. This is because the optimizer constantly determines the best sensitivity based on the conditions used to enter and exit the trades. I think we found a good value. For this strategy, we want to allow the possibility of trades running into extremely large profits. So we won't set a take profit option, since our trailing stop will track the price and can also act as our take profit. We'll also add a trend-based overlay in order to help filter trades only in trending markets. And we can also go down to overlays settings and adjust the value of the overlay until we start to see decent performance. We'll go down to the settings and also increase the range of sensitivity values to make sure there are no other values that might offer better performance. Now, things are starting to look much better. At this point, it's important to remember that just because a strategy performed well does not necessarily mean it will continue to perform well in the future. To illustrate this, imagine you're a driver on a racetrack. Up to this point, you know the route well. You know when to take 2 left turns and 1 right turn based on past experience. However, if you continue driving into unfamiliar territory and assume the same pattern applies, you could end up making a wrong turn and getting into an accident. In trading, relying solely on past data without adapting to changing conditions can lead to poor future outcomes. We need to ensure we have a robust and adaptable strategy. We hope you enjoyed this video and learned something new about the system. All these features and more are covered in great detail in our documentation at luxalgo.com. Thank you for watching, and we'll see you in the next one. You've been long and hard about your strategy, did some small testing here and there. But what if you could instantly see how your strategy would have performed in the past, without wasting hours manually replaying charts? Enter the Price Action Concepts Backtester. This is the second backtester in our ultimate package, and it's fully loaded with all the features you love from our Price Action Concepts toolkit, plus a few surprises. By the end of this video, you'll know how to backtest your existing strategies and even craft entirely new ones. So with that said, let's get to it. The first thing you'll see when opening the Price Action Concepts backtester are the backtesting window settings. This is where you define exactly when your backtest starts and ends, giving you full control over the historical data you want to test. Next, you'll land in the long and short conditions setup. This is where the magic happens. Every feature from the Price Action Concepts toolkit is available here, ready to help you define your trade entries, exits, and everything in between. And trust me, we've made sure you have a ton of flexibility to fine-tune every detail. Let's walk through a few key features and how to use them. So we're looking at long conditions, and you guessed it. This is where you'll set up the rules for your buy trades. For long conditions 1 to 3, the first dropdown lets you choose between a bullish or bearish condition. The second dropdown lists all the available triggers, including change of character, break of structure, and some more nuanced options like price entering or exiting an order block. For example, if we set the condition to bullish, any of the triggers we then select will be based on a bullish condition. And if we select enter order block as our trigger, the backtester will trigger a buy trade whenever price enters a bullish order block. Likewise, if we set the condition to bearish, then the opposite applies. The backtester will take a buy trade when price enters a bearish order block. Now, to the right of that trigger, we have one more option, which is the step setting. If you're familiar with the Price Action Concepts indicator, you'll know this allows you to create alerts based on specific sequences, and we've brought that same power into the backtester. We'll demonstrate how this works as we set up the second buy condition. For condition 2, let's set the trigger to detect a bullish break of structure. As soon as we do that, you'll notice all trades disappear from the chart. That's because we have both conditions currently set to step 1. With everything being set to step 1, this means that both conditions must be true at the same time for a trade to trigger, which for these conditions has never happened. To fix that, we'll change condition 2 to step 2. Now, the backtester will first wait for price to enter a bullish order block, step 1. And only after that happens will it wait for a break of structure, step 2, before triggering a trade. This step sequencing feature also works seamlessly with the external sources in the sessions filters, truly giving users more control over how your trades are executed in the backtester. But there's one more critical feature to highlight here, the invalidation behavior dropdown. This comes into play when using steps, ensuring your conditions are met in the exact order you've defined. Within the steps dropdown, You may have noticed an invalidate option. If any condition is set to invalidate and occurs in the middle of your sequence, the entire step sequence resets back to step 1. But the invalidation behavior setting gives you even more precision, allowing you to choose whether to invalidate if step 1 repeats, or if any step at all repeats out of order. It's an incredibly powerful feature for creating precise rule-based strategies, and once you understand it, it opens up endless possibilities. Everything we just covered for long conditions also applies to short conditions and exit conditions. The logic works the same across the board. Now, exit conditions allow you to define exactly when a trade should close. So, for example, you can set up a buy trade and have it closed only when the RSI becomes overbought or the MACD changes direction. But if you're not looking to use external indicators or any price action-based theories from the drop-downs to handle your exits, we've got you covered with a full set of traditional take profit and stop loss features. Here, you'll find options like ATR, trailing stops, percentage gains, and more. All these exit conditions give you the flexibility to exit trades using classic technical analysis methods or dynamic price action rules, whichever fits your strategy best. If we scroll down even further, you'll find all the price action concepts features organized into categories, including market structure, volumetric order blocks, imbalances, and so on. Each of these can be fully optimized to match your trading style. For example, if you're using imbalances as a trigger in your long or short conditions, the backtester will by default look for fair value gaps. But right here, you can customize that to use any of the other available imbalance types. You can even change the length of order blocks, market structure, any feature really, since we made it a top priority to make sure users can fully fine-tune every detail of their strategy. And below this section, you'll be able to also enable the forecast feature, which analyzes your past trade performance and provides an estimated forecast for future trades over a user-defined number of bars. Once you've theorized your strategy, backtested it, and you're now ready to move into forward testing, you can fully automate that process with alerts for every single trigger within the backtester, allowing you to sit back while your strategy runs on autopilot. With this backtester, paired with the Price Action Concepts Toolkit, you can build strategies from the ground up or bring in strategies you've been trading manually and finally see how they perform across any market with full historical data. But there's another way to approach this. Alongside the backtesters, you also get access to our AI Backtesting Assistant platform, the first of its kind AI agent designed to completely transform how you discover trading strategies for any market. Here's what makes it so unique. This AI understands the Luxalgo Price Action Concepts Toolkit inside and out. It can instantly generate backtested strategies that already meet your custom criteria. For example, if I want to trade Bitcoin, I could simply ask the AI for a strategy with over 100 trades, using the Price Action Concepts Toolkit, and requiring at least one imbalance and one order block as part of the logic. I could also set minimum performance requirements, like a profit factor above 1.5 and low drawdown. And just like that, the AI delivers a strategy that fits the bill. Ready to trade immediately or further refine in the backtester. It's a game changer for strategy development and optimization, putting cutting-edge AI and backtesting power directly into every trader's hand. We hope you enjoyed this video and learned something new about the Price Action Concepts Backtester. We'd love to hear your thoughts, so drop a comment below and let us know your biggest takeaway or any questions you have. Thanks for watching, and we'll see you in the next one.
Today, we're unveiling the new Luxalgo screeners. So as you know, we've had all of these exclusive toolkits a part of Luxalgo, and just recently we have introduced the backtesting system in a higher plan for people that want to backtest all of our exclusive toolkits. But as of today, we now have exclusive screeners that perfectly coincide with all three of our Luxalgo exclusive toolkits. And what these do is that they aim to give you a simple way to find trading opportunities across the assets that you want to screen for. So we're going to do a full walkthrough in this video for how these screeners actually work. But first, let's take a closer look up at all of the features. So now let's do a full walkthrough for how these screeners work on your charts, as well as what advanced features are included, and of course, how you'll be able to get access as a Lux Algo user. So there's actually 3 screeners that go with each Lux Algo toolkit, but for the sake of simplicity, since they're all the same structure and have the same components, but just different features per each toolkit, we're going to go over the signals and overlays screener. So before we dive into all of the settings here and how this all works, what is a screener, right? A screener is a simple way to find trading opportunities. And in the case of Lux Algo, we've introduced very complex screeners because we have tons of different elements a part of our exclusive toolkits. So we have the signals and overlays toolkit here, which you all know, and this has various different ways to display signals, whether you're trend following or a contrarian trader. It also has different ways to adjust the signals and introduce various specific indicator overlays like the smart trail that's enabled here on the chart. Then it also has a dashboard with various metrics like trend strength, volatility, the squeeze metric, as well as volume sentiment. So what we've done here with the screener is we've given you a full panel to visualize all of these different components across a multitude of assets that you can select, as well as all timeframes for each specific asset. So you can quickly take a glance at the screener, however you set it up, because it's fully customizable and displays in real time, which metrics or features are aligning to something that you want to go and take a look at as a potential trading opportunity. So as a very basic example, say you have a bunch of crypto tickers or a bunch of stocks here on your screener, and you want to take a quick glance through at which of these have bullish confirmation signals active, which is displayed right here in this column. You can quickly see that Apple stock on the 15-minute chart has a strong bullish confirmation signal active, as well as all of the different features within signals and overlays that you enable as a part of this. So you can quickly see all of the information that you need about specific tickers that you can select directly within the screener. Now, by default, the screener, since it has tons of components from the entire toolkit, is at the bottom of your chart just like this. And the reason for that is that this is a more traditional approach to using a screener, similar to the built-in screener by TradingView. But if you want, you can fully customize this and easily put it on top of your chart, just like a dashboard, by simply dragging and dropping, going into the settings and scrolling down to the location and putting it to the top right or the bottom left is what I would recommend. And then, of course, you would simply just disable a good amount of these features so that it can more properly fit here directly on your chart as an advanced dashboard for Lux Algo toolkits. All right, so now here we go. We now have a super advanced Lux Algo signals and overlays based dashboard on the chart. And the really awesome thing about this is that it can easily do multi-time frame per each specific ticker. So if we want to look at the daily time frame for all of the tickers that we're watching, whether it's stocks, forex, or crypto, absolutely anything directly from TradingView's built-in ticker search here, we can go and right next to it select the daily time frame or any time frame so that this screener is specifically displaying the time frame that you want to see. Okay, so that's the ticker section right here, as well as the time frames. And the first thing that you will notice within the settings is the sort by drop-down menu. So sorting allows you to easily go ahead and organize this in a very simple way. So if you wanted to sort the screener by the rating, which is just a general confluence of all of the features included within the screener, you can go ahead and select rating right here within the dropdown. And now you'll see that the screener is actually sorted from strong bullish down to strong bearish automatically so that you can go and easily look for the most bullish tickers, for example, directly at the top of the screener from the tickers that you select. So we know based on this screener setup that GBP USD on the 15-minute chart is the most bullish out of all of the other tickers that we have selected within the screener. And of course, since there are tons of other metrics that are included within the Signals and Overlays toolkit, as well as the screener now, you can go ahead and select the other options within here if you want. If you want to sort the screener by trend strength, the volatility, squeeze metric, the volume sentiment metric, or the number of exit signals that have gone off, you can actually sort your screener in these various ways as well. And if you click ascending, it will just show you the bearish to the bullish. So it's just simply flipped around. Now, scrolling down here, we have the tickers and timeframes, which we just went over. Then you will notice that we have the signal section, which has the algorithm set to confirmation by default. But if you're more of a contrarian trader, like you're trying to find reversals specifically, you're not trying to just follow the trend, you could set this to contrarian so that the screener will specifically use the contrarian signals algorithm within the Signals and Overlays toolkit. And just like the Signals and Overlays indicator itself, it has a sensitivity setting so that if you're someone that likes to use higher settings for your signals from within the toolkit, you can go ahead and easily set this as well within your screener. And now moving on to the screener elements, you can see that we have absolutely everything as a part of the Signals and Overlays toolkit directly within here. So by default, you will see something like this, where we have the ticker and the time frame, the actual price that's updating in real time, as well as the percentage change on the day that's updating right here. Then you have the rating, which just gives you a breakdown comparing all of the other elements within the screener. Then you have signal, as well as the exits that have occurred. Then you have the overlays on by default, which is Smart Trail, the Trend Catcher, and the Trend Tracer. And then you have these other metrics, which are incredibly useful in the context of screening, which is the trend strength, the volatility, and the squeeze metric. So the reason why I bring that up in terms of the metrics specifically being really useful here is that, for example, on the daily time frame, looking at the squeeze metrics, we can easily see which assets on a high time frame are likely to be in a squeeze, right? So we can see here, NVIDIA on the daily is at a 3.18% squeeze metric. And just because it's been in a solid uptrend for many, many months now, that is definitely not considered an opportunity for trading a squeeze to the upside. However, if you look at Apple on the daily chart, this is up at 97%, which is much more likely to be in a potential squeeze on the daily time frame. And of course, you can look at the other metrics quite simply as well across these different tickers. No matter what chart you're on, you can see that the S&P 500 on the daily has a 95% trend strength. So you may not want to consider fading that asset here on this time frame. And you can easily just go ahead and get a quick overview of all the features you want to display here on your chart directly. Now, since this is just a walkthrough and a tutorial, we are enabling a ton of different features. This is the default, and you will by default have this in the bottom pane below, which is set to the location of top center. When you go to the bottom of the settings menu, you can select the location as well as the screener size, so that you'll see it just like this in a more traditional view for a screener. But again, you can simply drag and drop. And then considering that this is on top of the actual price display, you will likely want to consider disabling some of these features if you're using it more like a dashboard, so that it's not this massive and doesn't get in the way of the actual price. So if you wanted to make a small dashboard that's just considering the main components that you want, like the price, the percentage change on the day, quick and actionable information, but just the signals, no overlays, and we don't even need a rating for this. We just want to see the metrics as well as the signal and the percent change, and then put it in the top right of the chart. We can see just how useful this is compared to typical dashboards that you'll see for technical indicators. And if you see this price scale on the left side of your screen, you can just simply right click on the right side price scale and merge it all into one. That can typically happen when you're dragging and dropping elements onto your chart, just like we did to get this right here. Now, the next component of how this screener can really be taken to another level is the filtering. So you see that we have the screener elements here. We have all of the features from the Signals and Overlays toolkit, but you'll also notice that they're all set to none, which means that they don't have any filtering for what assets are actually showing on the screener here in the top right. Now, if I go to Signal and I select only strong bullish confirmation, which is what this symbol is right here, we can see that the screener has now gotten rid of everything besides the tickers that are in a strong bullish confirmation based on the signals. And this is a very basic example of what sort of filtering you can do with this new screener for the Signals and Overlays toolkit. So this can be especially helpful if you don't always want to have the full set of tickers on your chart and you're really looking for a specific setup to go and quickly see as you start your trading day and want to actually look for assets to trade based on what things you find notable within the Signals and Overlays toolkit. And you can introduce multiple filters at once. Say that you want your signal to be a strong bullish confirmation and your trend strength to be above 70. We can go ahead and enter that right here. And you'll see that the only 2 tickers out of all 10 tickers that are selected here within the screener with their designated timeframes, of course, are the S&P 500 and NVIDIA on the daily chart. So that just shows you how the filtering can work and how custom your setups can really be for using these exclusive screeners as a part of the Lux Algo indicator suite. Now, we're really excited to have this released for all Lux Algo users, coinciding with which indicator toolkit you have. So if you have just the price action concepts toolkit, you'll have the price action concepts screener for completely free. If you have the premium and you have the Signals and Overlays, the oscillator matrix, and the price action concepts, you will have 3 screeners available for you completely free to coincide with your exclusive toolkits. So I know we just went over the Signals and Overlays in this video, but for all of the other Lux Algo toolkits, they have screeners that are set up in the same way so that you can scan, for example, market structure, order blocks, imbalances, and various different features like that for different styles of trading with their own individual screeners. Now, of course, in the highest plan, we have the back testing system, which is a bit different and takes these toolkits to another level in terms of giving you an ability to actually back test all of the features within all of our toolkits, and all members who have access to the back testing system will also, of course, be given access to our exclusive screeners for all 3 of our Lux Algo toolkits. So everybody should be added in by the release of this video. If not, it will definitely be within about 24 to 48 hours. And if you have absolutely any questions on that, please go to our website and contact the customer support live chat, and they'll be able to make sure that you are all set. Now, for all new users that join us, you will be given access to the exclusive screeners as a part of which toolkits you get access to directly on our website, which is luxalgo.com. Okay, so we're really excited to have this released. It's been heavily requested within our community, and we know it's going to give all of our users a lot more functionality in terms of finding trading opportunities across the assets that they trade. Of course, feel free to leave us feedback within the Discord in the feature request channel, and make sure to go down in the description, check out all the links that we have there. We have the Discord community as well as our Twitter and TradingView accounts. So make sure to go and follow those to stay up to date on everything that we're doing. And thanks for watching, guys. We'll see you all.
You started trading to gain freedom, but now you spend hours staring at charts waiting for the perfect trade. You ran from one prison and ended up in another. To avoid this trap, alerts are very important for any indicator, and that is precisely why our team spent months developing the most powerful and advanced alert system ever created for an indicator on TradingView. In this video, we'll break down alerts across our toolkits into 3 main categories. And at the end of the video, we will explain our most powerful alert system that allows users to create very specific conditions and sequences in a way never seen before. So let's get into it. For our first category, we have built-in alerts. These are predefined alerts created around the main features of each indicator. To access these alerts, you first need to ensure the indicator is on your chart. Then, click on the Create Alert icon at the top of the window. A new panel will open, and where it says Condition, you want to select Lux Algo Signals and Overlays. Click on the drop-down below, and you can now see all the alerts available for this indicator. you'll notice that there are two options here called Any Alert Function Call and Custom Alert Condition. These are more advanced options that we'll discuss later. All the other options listed here are based on signals that could be generated by the indicator. If you're not sure what each option is referring to, you can learn about them using the alert reference page in our documentation at luxalgo.com. For now, let's say I want to get an alert whenever a bullish confirmation signal is detected by the indicator. I will simply select Bullish Confirmation. You will then need to tell TradingView how often you would like the alert to be triggered. I want the alert to be triggered once per bar close, meaning when the bullish confirmation is detected, the alert will be sent once, but only when the candle closes. Finally, we can give our alert a name and type a message we would like to receive when the alert is triggered, then click Create. Now we'll get notified when a bullish confirmation signal is detected. While this is great for basic alerts, there is one issue. If a user wants to receive alerts for other conditions, they would need to create a new alert for each condition, and users can only create a limited number of alerts. So our developers got to work, and that's where our second alert system comes into play. Any alert function calls. With any alert function calls, users can create a single alert that will be triggered by multiple conditions by simply checking the options they would like to get alerted for. To use these alerts, click on the indicator settings and scroll down until you find the Any Alert section. I can select Bullish Confirmation, Bearish Confirmation, Bullish and Bearish Exits, Stop Loss, and Take Profit. Below those conditions is a box we can use to input a message we would like to receive when any of the above conditions are met. Then click OK. Now you want to go back to create an alert and select Signals and Overlays, but this time, select Any Alert Function Call. We can set a name for the alert and click Create. Now, if any of those 6 conditions are met, the indicator will notify me with this one alert. The next method of creating alerts is our most advanced option to date and is available across all 3 of our main indicators. If you go into the settings of the indicator and scroll down, you will see a section called Custom Alert Creator. This system allows users to create unique alerts based on specific sequences of events. Here's an example using the Price Action Concepts toolkit. First, let's enable market structure, order blocks, and liquidity grabs. Now, within Custom Alert Creator, I can enable and select Bullish Liquidity Grab to get those alerts. But if I only want to get that alert if the liquidity grab is also a bullish structure change, I can also check Market Structure and select any internal bullish. The indicator will now create a highlight bar at the bottom of the chart to show you every single time those conditions were met. But what if we wanted an alert to be triggered only if the conditions were met in a specific order? That is also possible with our system. By default, if the step values are left at 1, all the conditions need to be met simultaneously for the alert to be confirmed. To have them confirmed in sequence, we simply change the step values. Here is an example. We can have a liquidity grab as step 1, any internal bullish structure as step 2, and price entering an order block as step 3. And not only can users create these sequences using features from our toolkits, but the system also allows users to integrate external indicators into the custom alert creator. For example, if you happen to use the MACD as part of your setup, you can use one of our external step options to access the MACD indicator. Let's say I want a bullish change of character, but only if the MACD histogram is above 0. First, we need to ensure we have the MACD indicator on the chart. Then, we want to use the custom alert creator to select the bullish change of character for market structure, and then use the external step to select the MACD histogram. Use the conditional operator greater than, and enter the value in the last box, which in this case is 0. Now, we will only get an alert if there is a market structure change and the MACD histogram is greater than 0. Once you've created your sequence using the custom alert creator, you need to go back to alerts. Select the toolkit and then select Custom Alert Condition from the drop-down menu. Name the alert, set a message, and click Create. Now you have created one alert based on those conditions. The Custom Alert Creator is an extremely powerful tool that every user should take the time to learn and master. In future videos, we'll discuss using placeholders and creating alerts with the backtesting systems. We hope you enjoyed this video and now have a better understanding of how to create alerts when using the toolkits. Don't forget to use the documentation for more information regarding alert creation and how each option works. Also, join our Discord to provide feedback or suggest updates to the tools. Let us know what features we should cover next. Thank you for watching, and we'll see you next time.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want. and watch it take shape. You can plan, customize, and expand in any direction. From tools built for one to platforms ready for many. From passion projects to enterprise-grade systems. Everything is built in and ready to launch.
An AI that guides you in creating winning trading strategies. Whether you're a beginner or experienced, you'll find this tool useful. In this video, we're going to break down how you can use the LuxAlgo backtesting assistant, from logging in and exploring different strategies to customizing and fine-tuning them to match your style. By the end of this video, you'll see just how transformative this assistant can be for saving you time, boosting your confidence, and making smarter trading decisions. Let's get started. You can access the AI backtesting assistant directly from our website, or by going to luxalgo.com/backtesting as an ultimate user. Once logged in, you'll land on a dashboard where you can start requesting strategies. To get started, you'll see prompt suggestions, or you can type your own in the chat box. We'll start by using one of the suggestions. Provide a strategy with simple conditions and good results. Keep in mind that while it has access to thousands of strategies, it will only return a couple at a time to avoid overwhelming users. In this table, you can see details for each strategy, such as the ticker, toolkit, net profit, and more. Below that, it will provide you with more in-depth details, such as the exact entry conditions of that strategy and even the date the first trade was taken. And now that we have two strategies, we can dig deeper with the AI to compare the strengths and weaknesses. This can help identify issues we might overlook initially. For example, between these two strategies, when we look at the weaknesses, we see the price action concept strategy has a small number of trades, something you might not have noticed at first. So, let's ask the AI for a price action concept strategy with a higher trade count. Now, we get a strategy with more trades, but notice the asset has changed. This highlights an important point. To get the best results, we need to be specific with our prompts, letting the AI know exactly what we need. For example, I could input, provide me a strategy using the signals and overlays indicator on Bitcoin 5-minute time frame. The strategy should have over 50 trades and a high profit factor. By specifying the toolkit, asset, time frame, number of trades, and profit factor, we guide the AI towards more targeted outcomes. And while it's great to have the system just provide strategies, we can use it beyond that to develop more complete trade ideas. For example, let's say we're trying to determine which asset to trade. We can ask the AI, with your understanding of Bitcoin and Solana, which of the two is more volatile? So it seems Solana is more volatile. If Solana is more volatile, we can ask, what strategy is good for trading volatile markets? And it provides us with a number of options. Let's go with mean reversion strategies. Now, let's ask, provide me with a mean reversion strategy for Solana using the signals and overlays toolkit that has over 50 trades and a high profit factor. Notice this time I did not specify the time frame or the features to use. This is because, in this scenario, I am most concerned about the profit factor. The AI already understands how mean reversion strategies work and what features from the indicator to use for such a strategy. I just want a strategy that has more wins than losses over the last 50 trades. It's good to remember that by not being too specific, the AI can search through more conditions. So if you're having trouble locating a strategy, consider loosening the conditions a bit. A single change can make a huge difference. Now, looking at the results, we can see it's using contrarian signals from the signals and overlays toolkit. This is good for mean reversion strategies. It has over 100 trades, has a high profit factor, and a really low drawdown. Now, this is good, but let's ask for some more details. When was the last trade for this strategy, and what time frame is this strategy on? And now we know the last trade wasn't too long ago, and this strategy is on the 5-minute time frame. And we can see the net profit of the strategy, but we can also ask the AI to provide the net profit as a percentage of the starting balance. It's important to remember that all strategies in the AI are back-tested using a balance of $10,000 and the same order size. So the profit is relative to the trade size and account balance used. To demonstrate this, assuming we like this strategy, let's go ahead and recreate it on our chart. First, we'll go to our Solana chart on the 5-minute time frame. Since this strategy is for the signals and overlays toolkit, we'll also pull up our signals and overlays backtester. The strategy starts on August 23rd, 2024. So we'll input that into the start window. Now we'll need to enter the long and short conditions. This strategy is using normal contrarian bullish signals along with the bearish trend tracer for long conditions. The short conditions are using normal contrarian bearish signals with the bullish trend tracer. And just like that, we now have the strategy on our chart. We can go to the properties panel and change the account size and order size to better match our real-world account balance. From here, We can further develop this strategy by asking the AI how we can further improve metrics such as the win rate or drawdown. The possibilities are endless. Let's look at some other strategies we can find using the AI backtesting assistant. Let's ask, across all tickers, provide me with a strategy that has over 2,000 trades and a low drawdown. And just like that, we've gotten a strategy with a low drawdown and over 2,000 trades, which would usually take forever to develop on your own. We can also ask the system to provide us with 3 strategies, all with over 50 trades. Comparing multiple strategies allows us to identify the strengths and weaknesses of each, helping us choose the most suitable one for our specific trading goals. We can also be very specific with the features we'd like to use. We can ask the AI to provide us with a strategy that uses the steps feature from the price action concepts, has a drawdown below 30%, and also uses the liquidity grab as part of the steps. And there it is. We've truly made it that simple to find a strategy. So go down to the link in the description for access, and you'll be able to experiment with different strategies that work best for your trading goals right away. We have many updates planned that we can't wait to share with you, and look forward to your feedback. Thank you for watching. We just released the very first AI backtesting tool for trading indicators. 2 years ago, we announced our first backtester for our exclusive indicators, and for the first time, directly answered the question, does this indicator actually work? We allowed users to backtest everything within our signals and overlays toolkit. Since then, we've listened, we've refined, and when the time was right, provided 2 additional backtesters, making the most complete framework for data-driven analysts using our best toolkits on TradingView. So, over the past year, we've monitored how our backtesters were used, where users faced challenges, and where they found success. And today, we're excited to announce the newest addition to the suite, the AI Backtesting Assistant. The LuxAlgo AI Backtesting Assistant is trained on a vast number of parameters from our exclusive toolkits and is capable of providing backtesting data on nearly 1,000 individual strategies. Not only will the system deliver backtested data based on our premium indicators, but it will also dive deeper into the analysis, offering suggestions and allowing you to compare strategy performance across different markets. In effect, it's like having your own personal secondary analyst, one that fully understands the LuxAlgo indicators you're using and your goals as a trader. The AI backtesting assistant can provide strategies based around whichever assets are chosen by the user, returning information such as win rate, profit factor, drawdown, and much more. It's able to automatically sort through the best settings and combinations of features you want to give you the best possible strategies right away, without you having to go through and find these on your own. For an example of how it can be used, let's look at an Amazon chart on the 15-minute time frame. Let's assume you've completed your analysis, and you're now looking to go long at the current price. Maybe there isn't enough room here for 1 or 2 losing trades. So you'll want a strategy with a higher win rate to increase the chances that the next trade will be correct. Typically, you'd need to customize, tweak, and test endless combinations of settings within the toolkit's backtester to find the optimal strategy. But instead, now you can simply use the AI backtesting assistant on the LuxAlgo platform. The assistant already understands every single setting of our indicators, understands the current price action on Amazon, and can find the ideal strategy for you within seconds. A user may type, "The Amazon stock has broken out of a range and is now retesting the high of that range. I want a strategy with a win rate above 60% that uses the trend catcher to take a buy trade." The assistant will then look at current price action and provide the best strategy or entry conditions based on this scenario. Once it provides a strategy, you can take it a step further, requesting details on what features are being used, sensitivity value, the exact entry and exit conditions. The possibilities are endless. Let's pull up the Bitcoin 5-minute chart. We can ask, what's the best win rate strategy for BTC/USD on the 5-minute chart that uses overlays and confirmation signals? And with that simple request, it provides the strategy. If we happen to change our mind and want to focus on a different metric, like profit factor for example, we can type, how about which of the strategies has the best profit factor? And using the context from earlier in our conversation, it will give us exactly what we need with the conditions we described earlier. So far, we've demonstrated how it can be used to return simple strategies with simple request, but it can also handle more complex requests and strategies as well. If we don't have a specific asset we'd like to focus on, we can ask, what is the best profit factor strategy across any futures ticker? But it needs to be a three-step price action concepts combination strategy. In our price action concepts, users can create custom sequences of events before a trade is executed, and the LuxAlgo AI backtesting assistant understands this. It will search all available futures tickers, find a strategy that uses 3 steps before executing a trade, and provide the one with the best profit factor. Of course, you can then optimize this based on other metrics such as win rate, net profit, and even drawdown. You can even request general information about an asset, allowing you to develop more complete trade ideas beyond just your technical analysis. Backtesting your strategy with any combination of indicators is essential. It is the only way to truly know how robust and effective your strategy will be. However, we understand the struggles of manually doing this on TradingView with a backtesting script. Not only may it feel inefficient, but for the non-technical user, backtesting can seem very daunting. This is why we created this, to make backtesting strategies more accessible to everyone. Not only for advanced traders, but also for the non-technical who want a simple interactive assistant that helps give them the insights they are looking for on any market. For this initial version of the AI backtesting assistant, it will work on 20 of the most traded assets in the world and 3 of the most important timeframes traders need. It fully understands both our price action concepts and the signals and overlays toolkit. We have many amazing updates and features planned for this tool, and as powerful as it seems now, this is only the beginning. You can imagine how much further this can go as we add more features, data, and refine it over time with our community of over 150,000 traders. As this new assistant is designed for our backtesters, it is accessible with our ultimate plan on our website, which not only gives you access to the AI assistant, but also 9 other exclusive tools, the complete suite of 10 incredible products. Existing ultimate users automatically get access to the assistant, starting now. This is a new frontier of backtesting, one that is powered by artificial intelligence, and we're happy to be at the forefront of this transition for technical analysis. We look forward to your feedback and to see how you'll use this product. Thank you for watching. This feature lets you transform any strategy into a fully custom alert directly on TradingView. No limits, just pure creative control. It's called alert scripting, and it's by far the most powerful alert system ever developed on TradingView. We're putting that power right into the hands of every trader. We'll guide you through everything you need to know, from placeholders and operators to syntax and real-world script examples. By the end, you'll have the skills and knowledge to build the most powerful alerts and take part of, or your entire strategy to the next level. So what exactly is alert scripting? Simply put, it's a way to create fully custom alerts from the ground up. Unlike basic alerts, which are predefined and trigger on simple signals, alert scripting allows you to build alerts for just about anything you can imagine. Each alert script is made up of 3 key components: placeholders, operators, and the syntax. Once you understand these, you'll be able to create any alert you can imagine. We'll start with placeholders. There are over 100 placeholders available when combined across the price action concepts, the signals and overlays, and the oscillator matrix indicators. And they can be grouped into 7 main categories. The first, which are the market data placeholders. These placeholders include anything related to basic data on the chart, such as a candle close, open, or volume. Next, we have time-related placeholders. These allow you to carve out specific time periods to trigger your alerts, such as the New York, London, or Asian session. External placeholders allow you to use up to 5 external indicators as a part of your script. For example, the MACD, the Bollinger Band, or a moving average. They all can be combined with the features of the LuxAlgo indicators to create more complex alert systems. Next, we have custom alert creator placeholders. These allow you to reference a setup that you might have created using our previous alert system. Next, we have sequencing placeholders. These will help when creating alerts using the steps feature, or if you're invalidating a condition. Which now brings us to the toolkit-specific placeholders. These are placeholders that are exclusive to each of the 3 toolkits and provides you with direct access to all the features within each indicator. And finally, UDP, or user-defined placeholders, lets you create a brand new placeholder based on a set of conditions you define, and then you'll be able to reference those conditions in the future by just using that placeholder name you created earlier. Now, this is a lot to take in, but stay with us, because we'll be showing you examples of using these placeholders shortly. But before that, to make use of these alerts, you'll be using them alongside what are called operators. These can be broken down into 3 categories. There are comparison operators, which, as the name suggests, can be used to compare 2 or more items. For example, to check if 2 items are equal, greater than, or not equal to each other. There are also cross operators that help identify the exact points where 2 values intersect. The logical operators will allow you to connect blocks or conditions together. This will be done using the key phrases of and or. And finally, we have the historical referencing operator, which allows you to access past data. To start using them, go to the settings of the indicator. Scroll down to the alert scripting section. And this is where we can start combining our placeholders and operators to create alert scripts. So let's break down the anatomy of a few alert scripts here. This script is for the oscillator matrix. We're checking for a bullish divergence occurring during bearish overflow, but the hyperwave must also be below the 50 level and has started to trend higher. Now, to break down this script, we have 5 placeholders and 6 operators. 3 of those operators are logical operators, 2 are comparison operators, and 1 is an historical reference operator. Placeholders are always enclosed in curly brackets. This is how the script knows they are placeholders, and the operators are being used to collaborate those placeholders. So we have a placeholder that is first looking for a bullish divergence, but the AND operator ensures that this condition will not be true unless there is also an oversold bullish hyperwave. Once both of those conditions are met, it then looks for an overflow reading that needs to be below 50%, and the current hyperwave reading needs to be greater than the previous hyperwave value. And if this hyperwave reading is true, it means the hyperwave slope is upwards. Now, this is an example where we use the AND operator. The AND operator means that all those conditions must be true at the same time in order for the alert to be triggered. Let's look at another example where we use the OR operator. In this example, we're using the Signals and Overlays toolkit, and we're looking for bullish confirmation signals within a specific time period. We're still using an AND operator, but notice how we also have an OR operator. So now we have 2 main blocks of script which are looking for bullish or bearish confirmation signals during a specific time of the day, and they are connected with an OR operator. So either of these conditions needs to be true in order for an alert to be triggered. Now with this system, you can of course create really complex alerts spanning multiple lines. So what if I wanted to reference this exact set of conditions again without rewriting the entire thing? Well, that's where UDP, or user-defined placeholders, comes into play. This will allow us to easily reference this set of conditions at any point in the future without rewriting the entire script. For example, to access these conditions again easily in the future, all we need to do is create a new original placeholder name. We'll call it Session Execution and have it equal to the conditions we outlined. Now we can call Session Execution at any point in the future to be able to use those exact conditions again. Now, UDPs, as well as any placeholders for that matter, can also be used in steps. The steps feature allows conditions to be executed in very specific sequences before an alert is triggered, and to achieve this we'll use line breaks. In this example, we're looking at the Price Action Concepts toolkit, and in this sequence, which uses steps, we're looking for the following conditions: a 200 simple moving average crossing under the closing price, then a bullish change of character, followed by price entering an order block with higher buying volume than selling volume, then a bullish break of structure. Let's break down the alert script. In the first line, we define our UDP, which checks if the buying volume is greater than the selling volume within the order block, and we name this placeholder Volume Checker. We will be using this later in the script. On the next line, which represents the next step, we check if the external indicator has cross under the closing price. External one is the moving average, which we have on our chart and have set using the drop-down menu. Next step, we check for a bullish change of character. And since there are 2 types of bullish change of characters, we use the OR operator to check both. We then check if the price has entered an order block, but we're also going to use our volume checker UDP, which we defined earlier. And by using an AND operator, we ensure that both conditions are true. So we're checking if price has entered an order block and that buying volume is greater than selling volume. Once these conditions are met, we move to the next step, which is checking for a bullish break of structure. But we can add further logic to this. We can also incorporate an invalidation step using the invalidate feature. We will have it restart the sequence from step 1 if at any point during these steps a bearish change of character forms, or if the number of bars between steps is equal to or greater than 40 candles. This will ensure that the sequence happens exactly how we defined it, and also that the steps are not too far apart. This is a great example of how you can use the alert scripting feature to create really complex alerts for your strategy. Now, as much as we've covered today, we're still only scratching the surface of what's possible with this new feature, but we hope this video gave you valuable insights into how alert scripting works and how the scripts can be constructed. We're excited to see how you'll use this feature. Let us know about your experience in the comments, and be sure to join our Discord community to provide feedback and help shape future updates to this feature. Thank you for watching, and until next time.
When life plays dirty, water wipes. Now 2 times stronger and even softer.
To truly master an indicator, you need to do more than just understand how it works. You need to determine the perfect combination of features that aligns with your trading style. Are you a scalper? How do you pinpoint those short-term opportunities to enter and exit profitable trades? Or maybe you're a swing trader. How can you determine when exactly to close those longer trades that stretch across days? And what if you thrive on trading against the trend? The question remains, what precise combination of features and settings will amplify your strategy and maximize your profits in the long run? To help answer this question, our Signals and Overlays toolkit includes 4 presets and 5 powerful filters. In this video, we'll break down each one, revealing which features might best suit your trading needs. So stay with us because you really won't want to miss what we uncover here. First, let's add the Signals and Overlays toolkit to our chart. Now click the gear icon to go into settings. One of the first options you'll notice is presets and filters, which is set to none by default. Presets are tailored combinations of features based on different trading styles, while filters are used to remove unnecessary signals based on specific functions or overlays within the indicator. Let's start by taking a closer look at the Trend Trader preset. The Trend Trader preset brings together the trend catcher, the smart trail, and confirmation signals to create a powerful sidekick for your analysis. This preset enables traders to spot early trend changes with the trend catcher, confirm established trends using the signals, and leverage the smart trail feature as a trailing stop for entries. Combined with candle coloring, these features make this preset ideal for anyone taking a trend trading approach to the markets. Next, we have the scalper preset. This preset uses the reversal zones, confirmation signals, and the gradient candle coloring feature. It's a combination made in heaven for traders looking for opportunities on short-term moves in the market. The reversal zones serve as excellent exit points and help ensure the price isn't too overbought or oversold, while the confirmation signals validate shifts in trend direction. The real magic, however, lies in the gradient candle coloring. As the colors gradually transition from red to green, this feature offers insight into each bar, allowing traders to enter and exit scalping positions with remarkable precision. Up next, we have the Swing Trader preset. This setup is for those who prefer to hold a single trade over longer periods, rather than spending hours glued to the charts. It leverages the Neo Cloud overlay and confirmation signals, with an algorithm designed to focus on long-term opportunities, making it less sensitive to short-term price fluctuations. The Neo Cloud is all about confirming well-established trends and keeping traders in those trades for as long as possible. Paying close attention to the Neo Cloud step-up and step-down signals is crucial for effectively utilizing this overlay. And finally, we have the Contrarian Trader preset. This is designed for traders who want to go against the prevailing trend, aiming to capture the absolute highest and lowest points in the market. What makes this preset unique is that it's the only one that utilizes our Contrarian Signals mode and Contrarian Candle coloring. This combination is highly effective at pinpointing market tops and bottoms. The reversal zone also makes a return here, allowing you to identify general exit areas or gauge market volatility. In this preset, the candle coloring only turns green or red when a signal is detected, providing real-time alerts for possible highs or lows. After this initial color change, the candles gradually transition back to purple. If the market hasn't started to reverse by the time the candles return to purple, it may indicate that a reversal is unlikely, prompting traders to consider exiting their positions. Calling market tops and bottoms is extremely difficult, but if that is part of your strategy and you're looking for tools to help improve it, this preset might be exactly what you're looking for. These are just our 4 presets, but there's more. The indicator also comes with filters. They allow you to eliminate certain signals based on a feature within the indicator. For example, if you enable the Smart Trail filter, the indicator will only show signals that align perfectly with the Smart Trail direction. The same applies to the Trend Tracer, Trend Catcher, and Neo Cloud filters. One unique filter here is the Trend Strength filter. Now this is where the magic happens. The Signals and Overlays toolkit is constantly calculating multiple market factors to determine the strength of the current trend. This allows the indicator to provide you with a reading of the trend strength right there on the indicator dashboard. And when this filter is active, the indicator will only display a signal if the trend strength is above 50%, effectively cutting out the noise and eliminating weaker signals during choppy market conditions. Because here at LuxAlgo, we understand it's not just about making trading easier. It's about making it smarter, sharper, and more precise for everyone. Keep in mind that when using filters and presets, some other features within the indicator may become locked and unable to be changed. This is for simplicity and to prevent confusion. So, if you want to customize the indicator and its functions even further, make sure to set the presets and filters to none. We hope these presets and filters serve as a solid starting point to discover which features best complement your trading style. Let us know in the comments if you'd like us to create a video specifically covering how to use each overlay in depth.
Happy holidays, traders. Today, we're excited to bring you a brand new feature. Inside all three of our premium toolkits, you'll now find our all-new alert scripting feature. If you head to settings and scroll down, you'll spot a new section called alert scripting. This is hands down our most powerful alert system yet. It lets you create alerts using just about any of the features within the toolkit, along with up to 5 external indicators. We first have the condition input field, which is where we'll be crafting our alerts. Just below that, you can set your preferred time zone for those alerts, and you'll also see 5 external source options. We'll come back to those external sources in a minute. For now, let's focus on creating alerts. You'll be using what's called operators and placeholders to create them. Let's say I wanted an alert to be triggered only during the New York session. What I can do is start with an open curly bracket, type 0900 to 1700, and then close the curly bracket. This is formatted in hours and minutes. You'll notice that bars appear at the top of my chart, showing that exact time period. Now that we have our time input, I can start defining more parameters for this. I'll type AND, which is our first operator in these alerts. Next, open curly bracket and type bullish, underscore confirmation underscore any, and then close the curly bracket. Then we type OR, which is another operator. Open curly bracket 0900 to 1700, close the curly bracket, and open curly bracket, bearish, underscore, confirmation, underscore any, and close the curly bracket. Let's break down what we've written here. We're looking at price action between 9 a.m. and 5 p.m., and we're looking for any bullish confirmation signal or bearish confirmation signal occurring during that time. The bearish confirmation and bullish confirmation are just some of the many placeholders you'll have access to for crafting really complex and cool ideas. And now if you look, you'll notice the bar only highlights signals that occur within that period.
We have got to the point where literally anybody can build a fully working app without knowing how to code. This is based.
Understanding this one key concept in trading could completely do 180 on your profits. If you've ever found and entered the perfect trade only for the market to reverse and hit stop loss, or worse, you spot a strong trend, jump in, but as if on cue, the momentum dies, leaving you stuck in that trade for hours. Then there's one important concept you must master: trading sessions. Understanding this could be the difference between those frustrating losses and profitable opportunities.
Give me my money. Yeah!
So in this video, we'll be explaining what trading sessions are and providing you with some free tools to easily identify these sessions. We can break down sessions into 3 categories: Forex, stocks, and crypto. We'll use this indicator, which we'll share later in the video, to identify all sessions. If you go to the settings, you'll see that there are 4 major market sessions: New York, London, Tokyo, and Sydney. The Forex market trades 24 hours a day, 5 days a week, and these sessions refer to different financial centers around the world. The times listed beside each session indicate when the economy and banks in those regions are most active. If you trade the euro against the US dollar, this asset will be most active during the London and New York sessions because these are the currencies primarily used by the economies within these regions. There is also a period where the London and New York sessions overlap, and the asset will be particularly volatile during this time. If you look at the chart, you can see that during the Tokyo and Sydney sessions, the market ranged, but during the London and New York sessions, momentum picked up significantly, especially within that overlapping period. If we move on to stocks, the stock market opens from 9:30 a.m. to 4 p.m. Eastern Standard Time, with the most active period being within the first 2 hours. This happens to also coincide with the overlapping period of the London and New York sessions. You can adjust the indicator timing if you would like to be precise, but this region creates a lot of volatility for trading, allowing traders not only to catch large moves in Forex, but also to have sufficient liquidity in stocks to fill orders. The crypto market is a little different, since it trades 24 hours a day, 7 days a week. It's a little tricky to know when it will be most active. What you can do is use this other indicator, go to settings and change it to hourly. Now you can see what hours in the day have the most trading activity and what hours have the least. And you can use this on any asset. You can get both indicators for free at luxalgo.com/library and searching for the sessions indicator and the periodic activity tracker. Let us know in the comments what topics or indicators to cover next, and thank you for watching.
Hey guys, in this video, we are covering a really powerful trading setup using the Lux Algo signals and overlays, as well as the Lux Algo oscillator matrix, which you can get access to on luxalgo.com. All right, so we're going to go and quickly disable these indicators from the chart, select them from our invite only scripts, and show you how we set them up on our chart here so we can find these really simple setups to use with our premium indicators. So we're not actually going to be touching the settings of the oscillator matrix. We're going to leave this on by default, but we're going to go into the settings of the signals and overlays indicator and quickly do the following things. So we're going to turn off the signal mode, turn off the smart trail and the dashboard, and then just leave on the reversal zones, as well as the confirmation simple candle coloring. So essentially what we're doing here is we're only utilizing 2 features from within this toolkit. There's a lot of different features within this toolkit, but we generally recommend trying to find 2 to 3 to implement into your trading and sticking with those to create your own trading strategies in different setups just for analyzing markets in general too. So what we're going to be doing is utilizing these 2 core components of the signals and overlays for actually displaying on our chart. And then under here, we're going to be utilizing different features as they come up for building confluence on finding reversals, as well as areas to exit positions with the Lux Algo oscillator matrix. Okay, so we're just going to go here and look at a specific setup here and see what we can see on the chart. All right, so we can notice that at this very moment, we've already had price enter the reversal zone, and theoretically, you could have considered this as a place to enter short. But if you've watched our previous setup videos, you'll notice that I've covered a lot that the actual money flow and the threshold line rising at the same time is typically a very bullish signal that you don't typically want to fade. When you have an established trend here with the money flow and it's clearly making higher highs, and you have the actual threshold line rising at the very same time, that's a really bullish indication for analyzing the trend. So quite possibly you may not wanted to have considered this as the area for the whole entire trend here to actually reverse, right? And we've gotten a decent little pullback and the candles are now in purple, which is telling us that we're not in a confirmed downtrend or uptrend yet. However, we can notice on the oscillator matrix that we're generally holding in the green, and the hyperwave oscillator is coiling here above the 50 level generally as well. So what we want to see here is a more obvious setup for an actual reversal into this reversal zone, where we can target the reversal zone down below, as well as just look at the components from the oscillator matrix to find a very confluent way to enter our position. Say we were hypothetically going to enter a short position up here. So as we can see, the price goes into the green candles, which is a very bullish sign for the general price action. And now we can notice that we have had a reversal signal appear in real time on the oscillator matrix as the price entered the red reversal zone up here. And we've had a bearish divergence confirm on this candlestick right here. And then a couple bars later, we noticed another addition to the bearish divergence confirm right here. So after getting these signals and also paying attention to the money flow and how it's not interacting with the threshold anymore, this is a more confluent reversal. And we could be a bit more confident, especially as the price leaves the reversal zone, to consider entering a short position and then targeting a move to the downside. So that's what we would be doing as a part of this setup. And we can see that as the candles are going into purple, we are confirming the trend now and looking for our obvious indications to appear on the oscillator matrix to exit our position that we just entered up here, or potentially just as a more obvious sign, be looking for the price to actually just enter the opposing reversal zone in green down here. So we can notice that now the candles are actually entering into the red, which is a very bearish indication. We have gotten a larger reversal signal as well right here. So this could potentially be a place to take partial profits. However, it's not a very confluent setup for a reversal, especially considering that this money flow is now just entering the red and it is coming down quite a bit. So this is showing us that it's quite a strong downtrend. So we may want to wait for a couple more things to happen on the oscillator matrix and that potential move into the green to consider the reversal. And at this point, we can see that there's been a bullish divergence now confirmed here. And now we've gotten our move all the way into the green right here. So noting out on the chart, there was a green reversal signal right here. There was a bullish divergence that triggered generally around here. And price, of course, came into the reversal zone down here in green as well, as it completed the overflow here on the smart money flow components of the oscillator matrix too. So all three of these areas that I circled are notable points. Whereas if you entered up here based on the same signals that were calling for a potential reversal, those three previous points could have certainly been areas where you could have considered exiting your position depending on your risk management levels. So that's just one simple example showing you how you can theoretically use these core components from the signals and overlays and the Lux Algo oscillator matrix indicators. And a really great thing that I like about this is that the candle coloring is a really popular aspect for just analyzing the overall trend. And it's a really dynamic way to actually display the trends shifting from a downtrend into an uptrend. As you notice, the purple candles are a part of that transition. And then you can see how as the candles turn green, that is a general indication for a potential uptrend. And you can see these flashing back and forth to get a really clear understanding of when these trends might actually occur. And our core users tend to actually just use this a lot. Instead of always having the signal labels displayed on the chart, this can do very much of the same interpretation for you. And utilizing core components of our premium indicators like the Lux Algo oscillator matrix, or potentially if you explore through the price action concepts, you can find a couple of core components there that may be even more helpful for you in finding these high probability reversal signals to the upside or downside. Hopefully you found this video helpful. We're doing these setup series videos every single week, and we're constantly sharing these setups that our community is actually sharing within the Lux Algo Discord. So if you haven't joined the Lux Algo Discord yet, make sure to use the link in the description or authorize yourself access directly on our website if you're already an active user. And if you haven't gotten access to these indicators yet for your TradingView charts, make sure to go down below in the description and go to our website, which is luxalgo.com. You can sign up to any plan and unlock these instantly on your charts. All right, so thanks for watching, guys. Hope this was helpful, and we'll see you all in the next video.
Left in the
What up, guys? In this video, we are covering the Lux Algo price action concepts version 1.4 to give us a setup as a part of our Lux Algo setup series episode 3. Okay, so we are taking various components, specifically a part of the Lux Algo price action concepts indicator, to give us an entire setup to trade with. And here we are on the 5-minute time frame. So let's dive into the settings and explain each different feature that we're going to be using in this video. So we're going into the settings, and we are first going to be disabling the swing market structure. The reason for this is that we're going to simplify the market structure that we're going to be analyzing, and the internal is the primary one that people use for their analysis of the market structure on their chart. We're also going to be lowering the setting down to 3 from the default of 5. And the reason for that is to get a lot more reactive and actionable break of structure and change of character labels, as we are going to be looking at the near-term market structure. On this example, we are zoomed in quite a lot. There's only about 150 bars on our screen. However, if you are someone that does typically zoom out and you like to look at the longer term structures on any time frame that you trade, then you could consider, of course, using something higher, like 20, for example, as this will show you a lot more actionable market structure labels, and it's really all up to your preference. But it's a very popular method to be looking at the short-term market structure, very zoomed in to see all of the highs and lows and the details about each candle. So for that, we're going to be using an even more reactive market structure setting as 3 right here from within the indicator. Okay, so we're going to see these labels a lot more frequent, and they're going to help us confirm the trade setups a lot better than the typical default of 5. So now we are going to go down to the order blocks. We're not going to change the multi-time frame on the market structure for this setup. We're going to try and keep it as simple as possible. Same thing with the order blocks. We're not going to change anything at all right here. You can consider removing the metrics if you like to have a more classical appearance for the order blocks. And if this is a little bit too much for your chart, you can remove the metrics right here. We're going to disable the equal highs and lows since we're not going to be targeting those areas as liquidity. And we're trying to have a very, very simple setup, just using some really important concepts within this indicator. We are actually going to turn on the fair value gaps as a part of the imbalance concepts of the indicator, and we're going to change the time frame to the 15-minute chart. So now we can see on this very setup right here, we have the imbalances displaying here on the 5-minute time frame from the 15-minute time frame. So what we can notice in this specific area is that we have a very large fair value gap formed that is right here from this large impulse down. There's also another one overlapping right here, but that's not too much of an interest to us. We can see that that is more so of an opening gap, and we are going to pay most attention to this midline on the overall fair value gap that has been automatically detected by the indicator. Okay, so right now I put it on to the very moment that this change of character was confirmed. And with a change of character label, you do not want to treat this as a reversal that is going to immediately occur. Of course, we have the labeling here as change of character plus, which is considering this as a more confirmed reversal signal. And the methodology there is that we've already formed a higher low right here as a part of the market structure. And now we have broken the most recent highs as a part of this impulse down. We have broken the structure here. And the right way to use change of character labels as a part of the Lux Algo price action concepts indicator is to now look for a setup to find an entry. It does not generally have to be a perfect setup like a wick right down into this order block and then target a move up all the way up into this large order block up here. It can just be on the shorter term price action after the change of character, an entry into another order block that appears, or maybe another fair value gap. We can see what happens after this change of character appears. So if we're going to go and watch this example, we can see how we can find a potential entry, and we're going to cover that as a target to the midline of this order block right here. So this is where we're going to target, considering the majority of this impulse and the midline as a logical area to find some resistance and potentially a move back down. So we had a little touch of that fair value gap, but we are trying to find something more significant. We have this break of structure label, which is telling us that this trend is becoming a bit more confirmed. We are seeing good signs that this price action right here is headed into a solid uptrend. Now, if we watch further, we can see that these are all 15-minute fair value gaps displaying on our chart. So for anybody looking at these and saying that, oh, those aren't fair value gaps, you can know that these are generated specifically from the 15-minute time frame. And we're currently on the 5-minute chart right now. And we're doing that as a methodology to finding more significant fair value gaps to use as entries. So right here, this is a good indication in real time to consider as a potential entry. We had a move down into a fair value gap. There was a small impulse right here, which on the 15-minute time frame has generated that FVG. And right here could be a logical setup with a stop loss below the recent swing low, potentially right here on the very short-term price action. And we could target a move up into that FVG on the midline. There's also potential entries you could consider, like we could look for a move down into this order block, although it does have very insignificant volume. We can see we might consider a move into this order block as another potential entry. And we can see that occur right here as we got the entry into the order block. That's another potential entry to consider. Although the trend has already been going up quite a bit, we've already moved into that fair value gap. We could consider this as our sort of last potential entry before we might want to consider that this trend is getting a bit exhausted. So right after that move into the order block, we did see the impulse right into that midline that we were looking at originally from right here. This is where we identified the potential target. We got these two potential entries right here, and we reached the target right here. So that is the move. Of course, as you identify these points of interest when using the Lux Algo price action concepts indicator, like we found this midline was a great target for a trade setup, we could consider this as an entry and now look for it to retrace into another logical point of interest. And that, I would say, would be this 27% order block right here, right? This was a potential entry as we were about 10 candles back, but now we can see that there is a lot of significant volume during that last impulse that led us up here. And maybe we could look to target this order block as another area of liquidity, right? So let's see how this plays out as well. We got the move right down into this order block too. So that was just one example. Let's dive right into the next one so we can see how we can use the same setup for trading price action on various different time frames and assets. All right, so here is another example where we have a confirmed change of character plus, and we have some targets to the upside that we are considering based on this large impulse move that we have seen play out to the downside. So of course, we can see this fair value gap right here. And this is more so an obvious one as it's just a shorter term, smaller impulse that we can see. This is more so an obvious one that is likely to fill. But the ones that we're more interested in here are this order block right here in the middle of the impulse that's at 12%. So we're going to mark a level right there, as well as this fair value gap that occurred right at the bearish change of character that was at the beginning of the impulse itself. So we're going to mark that as well at the midline. So now, as we know, for this strategy, we have the change of character plus, and we're now going to look for an entry. So we're being patient and we're waiting for an obvious entry that is either at a fair value gap like this on the bullish side, or we could consider an entry at the actual order block that is now just formed at this level as well. So there's been two potential setups right here for our entry. And now what we can look for is a break of structure to confirm that we are likely to go and visit the upside, as well as monitor the trade as we are approaching this significant order block here to hopefully reach the higher levels of liquidity that we've marked out above. So we can see that we got our break of structure, and then we immediately got this move right up into the fair value gap. that also mitigated the order block that we originally spotted out as we had this change of character right here. And as we went over last time, this itself could be a potential trade setup. So we could also look for another change of character to form to consider a potential trade to the downside. So we have one right here. We're going to look for an obvious entry that is at a retest of a fair value gap that is on the bearish side. So right here, we're noticing some, but they're not too significant. There's not really an obvious retest occurring. Right here, we are getting one, and we have had a break of structure. So we could consider this as a place to enter a short. Although considering that the market has come down quite a bit, we can be a bit conservative with how we take this particular trade. Of course, this is all up to your discretionary analysis. But now we can see after that first break of structure and how we reacted on that 15-minute fair value gap right there. We can see a move that came down into this order block right here at only 8%. And we are now noticing the price is kind of interacting with this fair value gap area and now coming into the longer term order block that was previously a significant reaction at various different levels. So here we would definitely want to exit the trade if we took any of the opportunities that occurred during this downside move as well. So that's pretty much the way to use this setup with the change of character, wait to enter on an order block or a fair value gap, and targeting points of interest above using the same features. Okay, so this was all generated solely based on the Lux Algo price action concepts indicator, which is an entire toolkit for trading price action that we cover way more in depth in our document full overview video that we're going to link down below in the description. And if you want to get access to these indicators that are a part of the Lux Algo Premium Indicator Suite, which is the Lux Algo price action concepts and overlays indicators, make sure to check out the links in the description. And thanks for watching, guys. We'll see you all in the next video. Hey, what's up, guys? In this video, we are going to be combining two Lux Algo Premium indicators to get a very powerful setup on the setup series, where we are going to just go through all of the premium features within Lux Algo and find different combinations of features that you can use together to form trading strategies or just incorporate in your general technical analysis. Okay, so in this video, we are going to be combining two different indicators by Lux Algo, which are the Lux Algo signals and overlays, the one that's displayed right here, as well as the Lux Algo price action concepts right here. So I don't typically like to combine both of these indicators as they both have very different use cases. Okay, so generally you will notice that this is quite a bit messy. These are both all-in-one toolkits that have very different purposes. The price action concepts is very much pertaining to the market structure, raw price action, and a little bit of volume. Okay, and this is an entire toolkit in itself. While the signals and overlays is 100% focused on really what its name is, which is the signals and the dynamic features like the overlays that you can select within the settings and customizing that super deeply. So these have two different use cases. So when combining them, it's typically useful to strip down most of the features from one of them and utilize one toolkit as the primary and the other toolkit as the secondary layer for your analysis. So what we're going to do in the settings of the signals and overlays indicator is go to the signal mode and turn it off. Go to the candle coloring and turn that off as well. We're very much turning off a lot of core components of the signals and overlays indicator, since this video will primarily be about the price action concepts. So what we've done is we've turned off the signals, right? We've turned off the signals mode. We've turned off the candle coloring mode. We've turned off the dashboard, and we've just kept the smart trail enabled right here. So we're just going to be utilizing one feature from the signals and overlays indicator. And then in the price action concepts indicator, we are going to customize this slightly. Now, what we can see within the settings of the price action concepts indicator is the market structure right here. And we're going to disable the equal highs and lows, since that's not too aligned with the type of strategy that we're going to be implementing within this video. And we're also going to slightly adjust the order blocks. So this is all up to personal preference. You can customize these order blocks in a lot of different ways, whether that's the multi-time frame feature where you're trading on the 15-minute chart and you want 1 hour order blocks, for example. You could do that like this. So you can see these longer term order blocks while using this lower time frame, or you could simply just adjust the length. And we're going to go ahead and put this time frame setting back to chart so that it applies here. So you could just also adjust the length, which is on 5 by default. And this is all personal preference, as mentioned. If you're someone that typically zooms out a bit and you just want more order blocks, like you would expect one to be peering across the entire chart, then this is the scenario where you should likely increase the length setting or use a higher time frame. So in this case, we want to just increase it slightly. We're going to put it up to 7 so we can get some more significant order blocks on our chart. You can see this one is applying right here. We're going to increase it a little bit more for this chart just to customize it how we really want. And that is just like this right here. Okay, so this is the setup, and this is what we are working with for utilizing the Lux Algo premium indicators together to get some really solid trading strategies that you can implement. So the first thing that you will notice is that these change of character labels can oftentimes appear at the very top of an impulse, right? And that is a completely normal thing, because the way you're supposed to utilize change of characters when you're analyzing market structure is to then look for a setup to actually enter the market and then use the break of structure labels as confirmations during that trade. So if we're going to go on replay mode right here and take a look at this example where we had this change of character plus, which means that it's a more confirmed reversal signal that we want to pay closer attention to, look at the setups that form in the market, we can see that this was a perfect setup for us as the price continued upwards. And then if you were patient, you saw that it went right down and retested the smart trail, which is a really great setup to be looking for when utilizing market structure and this smart trail, which is a part of the signals and overlays indicator by Lux Algo. Okay, so in this scenario, if you were to take note of the change of character label, look for the retest on the smart trail, and then target the order blocks above, you can have a really great setup right there that you can see play out as price makes its way up into the upper order blocks right here. And the important things to note, of course, when trading with the order blocks by Lux Algo is that they will become mitigated and there will be new order blocks forming. So that's why in the beginning of this video, when you saw the order blocks not on replay mode, you can see that they're in totally different positions. And you're seeing that these are the most actionable order blocks to use right now. Yes, they may have played out in the past. Of course, it's just showing you the significant zones to consider and how you can use these as potential targets or entries alongside these signals and overlays and the market structure. So another confirmation to consider, because the smart trail setup is not something that always happens, is simply a break of structure, right? If you get a change of character and then you get a break of structure like this right here, this is when you can get a little bit more confidence that there is a solidified trend ongoing based on the market structure that is on your chart. That's why you'll typically see a lot of the time, you'll see change of character, another change of character. Once you see a break of structure, you can look for that setup again, while being a bit more confident that the trend is actually continuing to the upside. In this scenario, you could consider an entry down at this zone where the order blocks are. Of course, it's at 7%, so that's not quite significant. We may not want to really consider that. We might just want to consider that this trend is going to continue to the upside. And the targets, since we have the signals and overlays, which has dynamic features, has the smart trail up here. And what can we notice about this specific example is that it's right within a very high volume order block, which is actually the highest volume order block that we can see on the price action concepts indicator. So maybe in this specific example, you could either target an entry down here or just decide that this is enough confirmation for you. And we want to target this general area that I've circled right here as our obvious point of interest for trading with these two indicators together. And what can we see? We see a quick entry into the order block. And as we can see, the bounce has played out, and we're noticing that that general area that we were watching, we noticed that that was the area where we got our first initial reaction to the downside right here. Obviously, this was a clear area of resistance, and it would have been an incredible trade to take by utilizing these two indicators together while trading here on the 15-minute time frame. That's just two basic examples. And of course, you can watch it play out again. You know, these trends, you got this break of structure. These trends can play out really well. You will certainly be able to see how powerful these order blocks really are, just to consider as general zones for taking profit or finding nice entry setups. These order blocks are really, really great to analyze, especially always considering these percentages and the volume that's within them so that you know what's likely to happen in a more educated way than just drawing typical support and resistance levels. If there's high volume at an order block, like right here, this is 26% compared to 10%, compared to 15%, the higher the percentage is, the more likely that that order block is going to act as a level of support or resistance. And then the volume bars within it is telling you how active from this level the buyers were in green or the sellers were in red. So if the buyers were highly active at a certain level, then you can consider that the buyers are likely exhausted and the sellers can certainly come in. Same thing the other way around. When you see there's more selling volume compared to the buying volume, you can consider that the sellers are exhausted and maybe you're looking for some sort of short squeeze as price goes into an order block down below with more selling volume, right? You can see that right here. That's a perfect example as well. This is a great interpretation when using the order block specifically. And I think that's really important to mention because we see that in our community all the time. There is a little bit of confusion when it comes to how to actually analyze these volumetric order blocks here within the Lux Algo price action concepts. So that pretty much wraps up this video. I just wanted to make a quick example for you guys as a part of our new setup series, and definitely expect more of these to come very soon. We're going to just be uploading them nonstop so that we have a huge playlist of tons of potential setups using the Lux Algo premium indicators, which you can get access to, of course, on luxalgo.com. So all the links for that are in the description. And thanks for watching, guys. We'll see you in the next one.
Build a website you love with Wix. For your words, create your brand, your opportunity, your breakthrough. Feeling a vibe? Run with it. From can't look away to gotta have it. Make every detail yours. Bring out what's hot. Remove what's not. Crystallize it. Instantly set a tone that speaks in your voice to your audience. Keep moving. Your site grows with you. Add solutions that meet you where you are and take you where you want to go. Smooth to make, easy to love.
Day after day, I always see traders have confusion on how trend lines are actually meant to be drawn, what validates a trend line, how to trade breakouts, and much more. So in this video, I'm going to walk through everything you need to know about trading trend lines, including a lot of secret tips that most traders aren't talking about. Okay, so firstly, what is a trend line? Well, the simplest way to put it is that a trend line is an area of support or resistance during an uptrend or a downtrend. Markets in uptrends move up and then have a pullback, then they move up again and have another pullback, and repeat this process over and over again. What this creates is highs and lows, which we can use to draw trend lines. Now, a lot of people draw these completely wrong, and even sometimes people draw way too many, creating absolutely horrible charts that look like this. The correct way to draw a trend line is to find 3 significant points that line up and connect. You don't want to consider insignificant highs and lows. You just want to focus on the most obvious tops and bottoms in the market. And to make this as easy as possible to understand, I'm going to first show you the ideal trend line. So the ideal trend line is in a market that has a lot of volume, 3 clean touches with good space between each, and we also want it to have a near 45-degree angle or less. You can use the candle wicks and sometimes the candle closes within a trend line. It's preferable to have it as just the wicks, but if you have to use the candle closes at some points within a trend line, that can still be acceptable. So once you find a trend line with something like these characteristics, well, congratulations, you have an ideal trend line. Now we need to know how to trade this trend line. If the price actually comes and revisits this trend line again, you need to look at what happens before making a decision. Is price going to use it as support or resistance and bounce off of it? Or is price going to break the trend line? And the best way to tell if price is going to bounce off of a trend line is to watch the price action as it approaches. If price is smoothly approaching a trend line while still in an overall uptrend, we can expect price to bounce. And if price was in an uptrend making higher highs, but is now making a clear lower high while approaching the trend line more aggressively, we could expect the trend line to break. So how do we trade a trend line breakout? Well, instead of rushing into a trade the moment price breaks out of the trend line, we want to wait for a retest as a more optimal place to enter. We do this because not all trend line breakouts actually work. This is just the nature of technical analysis. There's no such thing as absolutes. For instance, here you can see price broke down out of the trend line and then it just came back right through, causing everyone trading the breakout to lose their trade. So instead of entering directly on the breakout, you ideally want to wait for the price to come back and retest the trend line, forming a new swing low or high to be confident that the trend has actually changed. So now this next tip for drawing trend lines is extremely valuable and what a lot of pro traders do to avoid fake outs and make everything a lot simpler. Instead of drawing regular lines, we can use the rotated rectangle tool to make it into a zone. So for this trade, we could have noticed the trend line zone above right here since it already has 3 touches. Then instead of entering here, we could wait for a retest and some bullish price action to be more confident in entering a long position. And then you can see that the real breakout occurs. Trend lines can develop in many different ways, even on the higher highs in uptrends and lower lows in downtrends. And by drawing them out like this, you'll eventually notice chart patterns starting to form, but that's a topic for another video. So drop a comment below if you want me to cover everything about trading chart patterns. Make sure to subscribe and turn on the notification bell so you know when we post, and we'll see you in the next video. So as many of you know, we make a lot of indicators. So many that it can even be a bit overwhelming. From all of our free indicators to all of our premium indicators, and even the updates that we do to these over time. In this video, I'm going to show you one simple setup that many of our users have implemented in their trading. And this can help literally anyone, even a complete beginner, to get a solid combination of features to use with Lux Algo. So make sure to like the video and subscribe, because we're also going to be doing a huge giveaway soon for all of the subscribers here on YouTube. All right, so let's get right into it. This setup is just a simple combination of Lux Algo overlays and the confirmation signals. So by going into the Lux Algo premium indicator here and enabling the reversal zones, trend catcher, and the EQ cloud, we will now have our charts able to look like this. And this combination of features allows you to get confirmations of trends and reversals all in one. Now, many of you know that the buy and sell signals are not meant to be followed blindly. We've made a lot of videos about this. The signals are meant to confirm trends, and they work the best in trending market conditions. So the key to this strategy is to use features alongside these signals to help us find the right conditions, place trades in smarter areas, and take advantage of these trends. The first way to avoid signals in ranging markets is to wait for price to first come out of the reversal zones before considering the next set of signals. Once price comes out of a reversal zone, you could then wait for two trend confirmations to enter your position, such as a buy signal and the trend catcher then turning green. The next two confirmations that you could add to increase the confluence in your trade would be the candles holding as green, as well as the EQ cloud turning bullish. You can see once all four of these confirmations happened, we got a large move to the upside. For exiting a position here, it depends on your strategy, whether you want to exit on these same indicators or just use a fixed risk to reward ratio. It's all up to you. So some ideas for exiting your position with Lux Algo features could be to just wait for a blue exit signal, or wait for price to come out of the reversal zones, or just wait for the trend catcher to change colors. And you'll find that the trend catcher a lot of the time will change colors very early, giving you a great exit signal if you're looking to lock in profits without much risk of the market reversing. This trend catcher is quite magical because it not only has the ability to catch trends early, but it can also help you filter out signals in ranging markets too. You can see in these areas, as the trend catcher is completely flat, the market was moving sideways, and you could have been more cautious when looking for signals to take. Many of the times you see signals play out is when the trend catcher decides to start moving up or down. So being aware of when this occurs is extremely important to filtering out false signals. Some other variations of features you could use in Lux Algo is swapping out the EQ cloud to the Neo cloud so that you can get more dynamic trends and better areas of support or resistance. You could also just explore the presets and filters up here after putting the indicator back to its defaults to find tons of great setups and filters for the confirmation signals. This strategy that I covered is useful, but it really hardly scratched the surface as to what our premium indicators can really do. So click right here if you want to see a huge playlist of Lux Algo trading strategies, and comment below what you want to see us cover in our next video. Thanks for watching. I'll see you guys in the next one. So many people use the RSI indicator completely wrong, and in this tutorial I'm going to show you the real ways to use it for trading stocks, crypto, or forex. So the misconception is that the overbought and oversold levels on the RSI are specifically for finding reversals. If the RSI is above 70, this is where the market is considered overbought and we can expect the price to reverse down. Same with the RSI going below 30. The market is considered oversold and we can expect the market to reverse up. Well, this is completely wrong. It's only useful if you're using it as a specific exit point in trading strategies in combination with other indicators, regardless of the overall trend. You will most likely not predict actual market tops and bottoms by just using the 70 and 30 lines, And it's super frustrating to see so many traders on YouTube actually present it like this. So the actual way to use the RSI is as a momentum indicator. The most important level on the RSI is not 70 or 30. It's actually the 50 level, which is this dotted line right in the middle. So once the RSI cleanly breaks above the 50 level, this is a sign that the market is bullish. And once the RSI cleanly breaks below the 50 level, this is a sign that the market is bearish. Any move back or around the 50 level is like a support or resistance level for the momentum. You can even draw a box around it to avoid fake outs here even more. Because if you get a move above or below the 50 level, it could easily be a fake out and the market could still be in the same trend. So retests around the 50 level are actually great entries to hop into an uptrend or a downtrend, or at least to begin developing a bullish or bearish bias on the market. Now for divergences. A divergence is when the price is making higher highs, but the RSI is making lower highs. This would be bearish and we can expect the market to go down. These are actually great to use with the RSI if you use it correctly. And this is where the 30 and 70 levels actually come most in handy, because RSI divergences are most significant if they appear above the 70 level and below the 30 level. And this next tip for RSI is something that I've never seen on YouTube before, and it actually involves the setting within the indicator. So if you've ever gone into the settings of the RSI, you've probably seen the number 14 here as the RSI length. Well, what this means is that we only want to consider divergences on the RSI if there are 14 candles or lower apart from each other. So we wouldn't want to consider this as a bearish divergence because it's way more than 14 bars apart. But for this divergence, we could consider it and put more emphasis on it in our analysis. If you increase the length, you can use this as an ideal amount of bars for the divergences you find on the RSI. Lastly is the moving average on the RSI. The way you could use this is as a signal line, like when the RSI crosses over the MA as a buy signal for a part of a trading strategy, or just as a way to see the RSI as a smoothed value. Because when the MA crosses over the 50 line, it's more significant than just the RSI crossing over the 50 line for following trends, as I described previously. All in all, the RSI is a very simple and useful indicator for finding trends, trading divergences, and for using it in strategies like we show all over this channel. If you want to see our trading strategy playlist with custom indicators we make from scratch, just click right here on this video. I hope this is helpful, and I'll see you guys in the next video.
The most common question I get about 3 Blue 1 Brown is, what do I use to animate the videos? And the short answer is that I wrote a custom Python library. Its name is Manum. So it's all programmatic and it's also very bespoke. And what I wanted to do with this video is offer kind of a behind the scenes to show you, one, what Manum is for those who don't know, and even for those who do know, to show a little bit about how I use it and what the workflow is. Now, the way I'm doing this is I sat down with Ben Sparks when I was in the UK a couple months ago. Many of you may recognize him from his many great number file videos. He wanted to know how Manum worked. I knew a number of other people had that same question. So I recorded the conversation. It's kind of a scrappy recording, but we'll make do. And after a simple hello world example, we animate the famous Lorenz attractor, which is very important in the foundations of chaos. It's also just a fun visual to get into. One quick thing I should mention before we dive in is that there are actually 2 versions of Manum. So the first has a history very intertwined with the history of the channel. The way I started the project, basically when I was finishing my undergrad, was that I wanted this coding project that would somehow let me illustrate mathematical functions better as transformations. Made a super scrappy bit of Python code for that, used it to make the first video on this channel. As I made more videos, the tool improved. As the tool improved, I would make more videos. And that's just continued ever since. Like the most recent video I made, which was about holograms, if I do say so myself, I was pretty proud of the visuals in that. And that would have been dramatically harder to do even 2 or 3 years ago. But over the last month, it was actually kind of a joy to make just because of a lot of the workflow improvements over the years. I've always posted all of the code that I make for videos. It's openly visible on GitHub. And I also made the tool itself, the underlying tool Manum, open source. But I don't, as a personality type, really have the constitution to manage an open source project. I also don't really have the capacity for it while I'm making videos. So I wasn't the most attentive to issues and pull requests and things like that. But a community of people who wanted it to be a more robust tool for others forked the repo and created a version that is attentive to issues and pull requests and has better testing and better documentation. And it's called the Manum Community version. So it's generally recommended people start with that. But in the meantime, I often do make a bunch of changes or developments to my own over
Steve Nisson describes a curious phenomenon, bursts of extreme volatility on a chart that, when interpreted correctly, don't just show price movement, they reveal hidden zones of power, zones where support and resistance aren't just guessed, they're felt. Traders have tried to bottle this magic for years, building tools that promise to capture it, but none quite nailed it until now. Today, we're going to show you an indicator born from that very concept, refined, modernized, and designed to lock onto those same volatility spikes Nissan first spotlighted. Let's dive in. First, let's clarify what high volatility actually means and how we can spot it. Volatility in trading can be measured in a number of ways, but one of the most widely used methods is the average true range, or ATR. By taking a handful of those candles, applying some basic math, we can calculate the average range, what we consider normal volatility. So, when a candle suddenly breaks above this average range, it's not just noise, it's a signal. That spike tells us volatility has surged, and that is how we identify a high volatility event. This indicator zeroes in on those rare high volatility candles. Bullish spikes are highlighted in dark green, while bearish ones appear in dark red. But it doesn't stop there. The indicator also marks the midpoint by default of each high volatility candle, automatically drawing horizontal levels that act as potential support or resistance zones. Zoom in on those levels and you'll spot something subtle but powerful. Small circles that occasionally appear when price taps into a zone, but doesn't close beyond it. This wick rejection is a key signal. It suggests the level is holding, and it's often the perfect moment to consider a trade. Now, if you open up the indicator's settings, you'll find some interesting customization options, starting with the ability to switch between historical and trailing display modes. In historical mode, which you've seen so far, the indicator draws a separate line from every high volatility candle. Each time price retests one of these levels, it marks the interaction with a dot. This mode gives you a detailed history of how price has respected or rejected past volatility zones. Trailing mode, on the other hand, works differently. When a new high volatility candle of the same type appears, and the previous level hasn't been broken, the line updates to reflect the most recent candle's values. This creates a dynamic, trailing level that adapts in real time while keeping your chart cleaner. We also wanted to give you flexibility in how support and resistance levels are drawn, because different traders prefer different reference points. With the percentage setting, you can define exactly which part of the candle is used. Setting it to 100% will anchor the levels to the candle's close, while 0% uses the open. You can fine-tune anywhere in between, depending on how you interpret candle behavior. Just below that, you'll find filter settings that let you adjust the sensitivity of the volatility detection. This is where you can tweak the ATR multiplier and other parameters to better match the dynamics of your specific market or trading style. And finally, the style options give you control over how the indicator displays, like adjusting the colors of bullish and bearish volatility candles to fit your chart aesthetic. And that covers all the settings available within the indicator. Now, let's shift from theory to practice and see how this tool performs in real market conditions. Now, you can absolutely experiment with this indicator and develop your own strategy. But based on our testing, here's what we've found to be a reliable approach when tracking trades. The first thing we look for is confirmation that the level, created by a high volatility candle, is actually acting as support or resistance. In this example, we have a bullish volatility candle, and what we want to see are at least 3 interactions with that level. In other words, 3 rejection dots. That tells us price is respecting that zone, but we're not jumping in just yet. On that 4th touch, we want more than just a reaction. We want a high volatility candle to either break or bounce off the level. This signals that volume and momentum are backing the move. After that, we wait for price to return and interact with the newly established resistance, rejecting it in the same direction as the breakout. That's our trigger. From there, we place our stop just above one of the volatile candles and target a clean 1 to 2 risk to reward setup. In some setups, these high volatility candles can serve as direct entry triggers for your trades. You can use the accompanying support or resistance line as your stop loss level and another volatility zone as your target. In this example, we've set the support and resistance levels to 0%, so they're drawn from the open of the candle, giving us a precise baseline. We're also using the NeoCloud from the Signals and Overlays toolkit to confirm our directional bias. When it's blue, we're only looking for long setups. When it turns red, we're hunting for shorts. In this case, the cloud is red, so we're focusing on short opportunities. What we want to see is a volatility spike, a candle that aggressively rejects the NeoCloud resistance. That's our entry. From there, we place our stop above the resistance line drawn by the volatile candle, and we set our target at a lower support zone formed by another high volatility event. And that wraps up our breakdown of the candle body support and resistance indicator, an intuitive way to pinpoint explosive price moments and uncover hidden support and resistance zones with precision. You can start using it right now, completely free, at luxalgo.com/library. And if you want to take your trading confidence to the next level, Don't forget about the signals and overlays toolkit we used alongside it. Tools like the NeoCloud give you that extra layer of directional clarity, helping you filter noise and lock in on high probability setups. You can try it out risk-free for 30 days at luxalgo.com. Thanks for tuning in. Trade with intention, manage your risk, and we'll see you in the next one. Most traders rely on market highs and lows whether they realize it or not, using candle highs for stop losses, swing lows for take profits, or simply referencing daily, weekly, or yearly extremes. These levels are baked into trading strategies across the board. The problem? Identifying them consistently takes time, and missing one could cost you. That's why we built a tool that does it all for you automatically. In this video, you'll see exactly how this indicator works, how to get it on your chart, and why it can seriously level up your trading game. Let's get into it. These levels, market highs and lows, are almost impossible to ignore. That's because nearly every trading strategy out there, especially swing-based ones, taps into them in some way. And more often than not, those swing points align with higher time frame candle highs and lows. Take this daily chart, for example. If we mark the high and low of this candle, then drop down to the 4-hour chart, those same levels become clear pivot points. Now, tracking these across multiple time frames manually, that gets tedious fast. And that's exactly why we built this indicator, to automatically map out those key levels so you don't miss a thing. Once the indicator is added to your chart, you'll immediately see a series of red and green lines, each accompanied by a number off to the right. Red lines represent candle highs, green lines mark candle lows. The numbers indicate how recent that level is, 0 being the current candle, 1 the previous one, and so on up to the 4th. To help you quickly identify the current open candle, its high and low are drawn with dashed lines, while the rest use solid lines. You'll also notice something different at the extremes. The highest high and lowest low are marked with shaded areas instead of just lines. This is intentional. These zones highlight potential major supply and demand levels, giving you a visual edge in spotting key decision points. You may also notice 4 vertical lines drawn on the chart as well. These lines mark the start of each candle on the higher time frame being used to draw the levels. And if you're curious about what time frames these levels are pulled from, that's all adjustable in the settings. Here, you can control everything. The Show Last option determines how many previous candles the indicator uses to draw levels. By default, it's set to 4. Right below that is the frequency setting, which selects the time frame of those candles. It's set to daily by default, meaning it references the current and last 4 daily candles to map out highs and lows. You also have control over the size of those supply and demand zones through the area width setting, which adjusts how thick those shaded regions appear. We also added a smart filter. When enabled, it automatically removes highs that are below the current price and lows that are above it, keeping your chart clean and focused. And for those who love to customize, you've got full styling options for tweaking colors, transparency, or even turning off the zones entirely if you prefer a minimalist look. And now that we have a pretty good understanding of how this indicator works, let's see how traders might consider using it to make life easier. For this setup, we'll start by heading into the indicator's settings and changing the frequency to monthly. Then we'll jump up to the monthly time frame to break it down. What we're looking for here is a potential reversal setup. Notice how the candles are consistently printing lower highs and lower lows. A classic downtrend. The strategy is simple. We wait for a break above a previous candle high. Once that happens, we target a high from one of the earlier candles, like this bullish candle here that stands out in the sequence. Now, instead of manually plotting each of these highs and lows, we just let the indicator do the work. With it enabled, we instantly see the highs and lows of the past 4 candles laid out for us. What we want is a break of the level marked 1. That's the high of the most recent closed candle. And our target will be the level marked 3, which aligns with that earlier bullish candle. So let's drop down to the 4-hour time frame. The beauty of this setup is that even on the lower time frame, our monthly levels remain clearly visible thanks to the indicator. We can easily spot the 1 level we're watching for a breakout and our eventual target at 3. To strengthen the setup, we'll now add the Signals and Overlays toolkit and enable the Trend Tracer. This tool is excellent for cutting through market noise and revealing the true direction. Once we start seeing candles closing above the 1 level and the Trend Tracer flips bullish, that's our signal. We set our stop just below the breakout level and our target at the level marked 3. Clean, straightforward, and highly effective. And if you're taking less complex setups, this indicator also works beautifully for those as well. In this example, we're still using monthly levels, but analyzing them on the 4-hour time frame. Right here, we can see the current monthly low. We know it's the monthly low because of the dashed lines being used to plot this area, indicating we're dealing with the active candles range. Now, notice how price has reacted at this level. It's been rejected multiple times, signaling it is a strong support. So if broken with volume, major opportunity. At this point, the setup becomes straightforward. All we're waiting for is a clean break and close below that dashed line. Once that happens, we look for a logical target based on previous price action. In this case, the low of the third most recent monthly candle has already shown its significance. It's been respected more than once, and that makes it an ideal target for the trade. No guesswork, just a clean read of market structure using automated levels that do the heavy lifting for you. And that wraps up our deep dive into the previous high and lows indicator, an effortless way to visualize key price zones and structure across any time frame. You can start using it right now completely free at luxalgo.com/library. If you want to level up even further, don't forget about the signals and overlays toolkit we use today. With tools like Trend Tracer, it adds real-time confirmation and clarity to your setups, and it's available risk-free for 30 days at luxalgo.com. Thanks for watching. Trade smart, stay sharp, and we'll see you in the next one. What if you could start noticing the handoff from bulls to bears, bar by bar, instead of waiting for a decisive candle to close? Over the past few months, we've been tinkering with an idea that might make that possible. A free indicator that shows the flow of structure as an oscillator, rather than pinpointing exact breakpoints. In the next few minutes, you'll see how it works, how to add it to your chart, and why it could become a gentler, more flexible alternative to the usual wait for the break routine. Let's take a closer look. Before we dive into charts, let's ground ourselves in what traders call market structure. Put simply, price moves through three major states: uptrends, downtrends, and ranges. In an uptrend, each push leaves behind a higher high and a higher low, showing buyers consistently winning the tug of war. Flip that around, lower highs and lower lows, and you have a downtrend. When neither side can impose a clear pattern of progress, price drifts sideways in a range, bouncing between support and resistance as conviction stalls. Traditional tools detect market structure by waiting for decisive breaks or closes at those swing points, so the readout can feel abrupt. One moment you're bullish, the next you're bearish. That's the gap we set out to narrow. The indicator we've built translates those binary swings into a smooth oscillator, letting you watch the structural pressure build and release in real time, rather than only after the break. When you add the indicator, it opens in its own pane beneath the price chart. The panel is split at the 50 level, which acts as equilibrium. The yellow upper band marks the overbought zone, and the blue lower band marks the oversold zone. The market structure oscillator line oscillates around that midpoint. Prints above 50 show buyers edging ahead, while moves below 50 warn that sellers are taking control. Behind the line sits the cycle oscillator histogram, turning blue above 50 to signal strengthening bullish pressure, and amber below 50 to flag building bearish pressure. Reading the line for direction and the bars for acceleration lets you catch momentum shifts early and line up entries before price makes its next decisive move. Now, if we open the settings of the indicator, you'll see that the market structure oscillator is driven by three time frames: short, mid, and long term, borrowed from the pure price action structures indicator, which we broke down in this video. Each tier has its own weight value. Increasing a weight tells the engine to give that particular structure more sway over the overall reading. Beneath the weights, you can toggle market structure oscillator cross signal, which paints a small circle on the price chart whenever the oscillator crosses the 50 level equilibrium, giving an at-a-glance bull or bear market shift alert. The cycle oscillator offers similar controls, so you can highlight its bullish or bearish crossovers just as easily. Although the oscillator is designed to spare you from tracking every swing point, the traditional structure levels are still just a click away. Under Market Structure on Chart, you can switch on short-term, intermediate, or long-term swing lines for added visual context. And if you ever want to inspect the raw inputs that feed the final market structure oscillator line, the Oscillator Components section lets you display each tier's individual line before they're merged and smoothed. Now that we have a solid grasp of how this indicator works, let's look at some examples of how you can use it in real trading. In this example, notice first that the overall market structure oscillator is bullish, even though it wobbles a bit along the way. To fine-tune our entries, we open the settings, head to Oscillator Components, and switch on the short-term structure line. Now we're watching two layers at once, the blended long view reading and the isolated short-term pulse. Our plan is simple. Wait for the short-term line to dip into the oversold blue zone. A dip there tells us to start stalking buys, and because the broader structure remains bullish, that bias is fully aligned. But we don't pull the trigger immediately. Instead, we watch the cycle oscillator for confirmation that momentum is turning. When its histogram flips and the line crosses back above the 50 level equilibrium, momentum and structure are finally pointing the same way. That's our cue. We go long, tuck a stop just below the most recent swing low, and aim for roughly a 1 to 3 risk to reward. The key takeaway is synergy. Use the overall structure to set the bias, the short-term structure to pinpoint the zone, and the cycle oscillator to time the actual entry. Here's a second setup that layers the oscillator with the reversal zones and trend catcher overlays from the Signals and Overlays toolkit. Reversal zones highlight price areas with a high probability of a retrace or full reversal, while the trend catcher flashes very early entry cues. Handy, but only when they're filtered through solid confirmation. On this chart, the market structure oscillator has been parked in the oversold or blue region for several candles, and price is sitting inside a reversal zone. That tells us to start thinking long. Instead of jumping in immediately though, we wait for trend catcher to flip to a bullish signal. This helps us sidestep premature entries. As extra confluence, we check that the cycle oscillator's momentum bars have risen back above the 50 level, showing buyers are really stepping up. Once those three conditions align, we go long, tuck a stop just below the recent swing low, and aim for a measured 1 to 1.5 reward to risk. We keep the risk to reward low since the overall structure reading is not fully bullish, and this is more of a retracement play. And that wraps up our look at the market structure oscillator, an easier way to watch trends hand off from bulls to bears in real time. You can drop it on your chart right now completely free at luxalgo.com/library. One extra firepower for timing those structure shifts. The Signals and Overlays toolkit we paired with it today is waiting for you too. Risk-free for 30 days at luxalgo.com. Thanks for watching. Trade smart, stay sharp, and we'll catch you in the next one. Ever noticed those massive candles during major news events or volatile market moves? They often leave behind these huge wicks, like the market stretched too far and snapped right back. Those wicks aren't just noise, they're clues. And knowing how to trade them can be the difference between a win and a loss. That's exactly why we built an indicator that automatically detects these large wicks for you and marks out the key support and resistance zones they create. And we're giving away this indicator for free. So let's dive in, because this might just be the edge your trading strategy has been missing. Let's first break down what wicks actually are. Each candle shows the open, close, high, and low of price movement within a given time frame. The wicks represent the price extremes. At a one-dimensional level, many traders often use these wicks to help identify candle patterns like the doji formation or tweezer tops and bottoms. But there's more to these wicks than just surface-level formations. If you were to zoom in on one of those long wicks, you'll often find they represent retracements of lower time frame moves. And based on the principles of market structure, many of those wicks tend to get filled later on. But here's the challenge. How do you know which wicks are meaningful and which ones are just noise? That's exactly where our custom indicator comes in. When you first add the indicator to your chart, the most noticeable elements are the green and red horizontal lines stretching across the screen. Red lines mark significant bottom wicks, and green lines highlight major top wicks. You'll also see that the candles themselves look different. That's because by default, the indicator uses something called wick-based transparency. This setting makes candles with smaller wicks appear more transparent, while candles with larger wicks stand out more clearly. It's a smart way to visually emphasize areas of volatility. But how does the indicator decide what counts as a large wick? That's where the settings come in. If we go into the settings, the first option is the wick threshold, and this controls the sensitivity of the detection. Lower values detect more wicks, while higher values filter out all but the most significant moves. Next is the level percentage setting, which defaults to 100%. This determines where the wick level is drawn from. At 100%, the level is placed at the very high or low. Reduce it to 50%, and the level is drawn from the midpoint of the wick, useful depending on how you'll be using the indicator. Then there's max duration, which sets how long a level stays visible on the chart, useful for hiding older zones that may no longer be relevant. The next toggle is mitigated wick. If this is disabled, any wick level that price has already interacted with will be removed from the chart, helping you keep things clean and focused. Finally, under the style section, you'll find two key options: wick-based transparency, which we covered already, and breakout-based color. This one adds another layer of clarity. If enabled, the indicator will color candles based on the most recent wick level that price broke through. And now that you have a good understanding of how this indicator works, let's see how it can actually be used to execute trades. Now, one of the most effective ways traders use wick zones is as target areas. Take this example. The market breaks structure and forms a higher high, but on the pullback, it leaves behind a significant wick, which our indicator flags in real time. Now, if you look closely at the price action next to that wick, you'll notice a large clean candle. That's important. It tells us price moved through this area easily before, without much resistance. This makes it a prime target for a short-term retracement trade. To trade this setup, we'll activate the Signals and Overlays toolkit. We start by disabling both candle coloring and smart trail, and then turn on the short-term autopilot. Now we simply wait for a bearish confirmation to form. and we'll set our target at the low of that wick. Once we get to that wick target, watch what happens next. It sharply reverses. That's a strong clue. It shows how these wick zones often act like magnets for price, but also as reversal points once filled. The key takeaway? Always consider the surrounding price action when using wicks as targets. They not only highlight volatility, but can help pinpoint short-term opportunities with precision. Here's another great example. This time, we're trading in the direction of the overall trend. We see the market is trending higher, confirming bullish momentum. Then, a large wick appears, immediately detected by the indicator. As we touched on earlier, large wicks often represent retracements on a lower time frame. So let's drop down to a lower time frame to see what's happening. And now, it's clear. The market continues to make higher swing highs and lows. And that wick pullback? It's just a healthy retracement. And once more, notice how a large, clean-bodied candle forms during that push to the upside, which we're now retracing into. Once price clears that candle and a bullish candle starts printing, the entry becomes obvious. We can place our stop loss below that candle's low and target the wick level above. Simple, effective, trend-aligned. And that wraps up our deep dive into the long wick detector, a powerful tool that transforms overlooked price extremes into actionable support and resistance zones. You can add it to your chart right now, completely free, inside the LuxAlgo library at luxalgo.com/library. And if you're looking to sharpen your entries around those wick zones, the signals and overlays toolkit we used alongside it is also ready for you. Risk-free for 30 days at luxalgo.com. Thanks for tuning in. Trade smart, stay sharp, and we'll catch you in the next one.
Thieves take 60 cookies from a bakery. They eat 3 and drop 12. How many are left?
There's one strategy that stood the test of time and has been used by some of the most elite traders on the planet, and it all centers around the market open. Why? Because during those first few moments, the volume is explosive, the price action is clean, and the opportunities are prime for sniping entries and locking in profits. Today, we're unveiling a brand new indicator that automatically detects these opening range plays, complete with precision entry signals and powerful confluences. Best part? It's completely free. Let's break down how it works and how you can use it to level up your trading. Market open breakout strategies are widely recognized and frequently used among traders, but what sets them apart often comes down to the specific time frame selected to define the breakout zone, such as the first 15 or 30 minutes after the market opens. Despite these variations, the core principle of the strategy remains consistent. Establish a directional bias using higher timeframes, then wait for a clean breakout or a precise retest of the defined range before executing an entry. This structured yet flexible approach is what allows traders to capitalize on the initial surge of momentum with great clarity and confidence. Once you've added the indicator to your chart, the first step is to switch to a time frame below 30 minutes. Ideally, the 5-minute. This is important because by default, the indicator calculates its opening range based on the first 30 minutes after the market opens. The indicator then extends the high and low of that range across the rest of the session to serve as reference points for potential breakout moves. These ranges are color-coded to reflect their relationship to the previous day's opening range. Green, if the current opening range is higher, and red if it's lower. When a breakout is detected beyond this range, a triangle is plotted on the exact candle where the breakout occurs, giving you a clear and timely signal. While this type of strategy is most effective on trending days, it can also be adapted for range-bound conditions. Traders can use the same framework to look for mean reversion plays, targeting a return to the opposite side of the opening range. You may also notice thin horizontal levels appearing above or below the opening range. These are dynamic target zones plotted in response to the breakout signals. Once a target is reached, a new one is immediately plotted beyond it. This creates a continuous sequence of take-profit levels, allowing you to strategically scale out of your position by closing partials along the way. Opening the settings panel of the indicator reveals several customization options designed to give traders full control over how the strategy is applied. The first notable toggle is the ability to unlock historical data. When this is disabled, the indicator will only display the current session's opening range, helping to declutter your chart if you prefer a cleaner look. Recognizing that not all traders use a fixed 30-minute window to define the opening range, the next section allows you to adjust that time period. Whether you prefer shorter or longer windows, or even custom intervals based on unique session starts, you can tailor the detection to suit your strategy. Further down, the breakout signal settings let you tweak the size of the breakout markers and apply directional filters. If no bias is selected, the indicator will trigger a breakout signal the moment price breaches the range, regardless of direction. However, selecting the daily bias option introduces a smarter filter. Breakout signals will only immediately trigger if in alignment with the established daily bias. If price breaks in the opposite direction, no signal appears unless the first target is hit. This helps to reduce noise and avoid false signals in the wrong direction. Next, the target configuration settings offer options to fine-tune your take-profit levels. You can toggle target display on or off, set the percentage of the opening range used to calculate targets, and choose whether targets are validated by a full candle closing beyond the level or just a wick touch. You also have control over how targets behave, either adaptive, resetting with each breakout as they do by default, or extended, where all levels persist until a new range is formed. Finally, a session moving average is included. This can be enabled and customized to serve as a trend filter or dynamic trailing mechanism for entries post-breakout, adding yet another layer of precision to your strategy. Now that you have a clear understanding of how the indicator functions and how to tailor it to your trading style, let's dive into some practical examples of how it can be applied in real market conditions. It's important to remember that not every breakout is worth trading. Just because a breakout is detected doesn't automatically make it a high-quality setup. One of the most effective ways to validate these moves, beyond simply having a directional bias, is to confirm them using volume and momentum analysis. In this example, we're incorporating the Oscillator Matrix Toolkit, which provides real-time insights into money flow and momentum via its hyperwave signals. Take this Tesla setup, for instance. Immediately after the first 30 minutes of market open, we got a breakout signal. However, the oscillator matrix showed the market was already in an overbought state at the time of the breakout, an early warning that a retracement was likely before any continuation. And that's exactly what happened. But during the second breakout from the same range, the oscillator indicated bullish money flow, and we were no longer in overbought territory. These conditions made the second breakout a far stronger candidate for entry. For this trade, we placed our stop loss at the midpoint of the range and planned for 2 take-profit levels. When deciding how many targets to set, always ensure your risk-to-reward ratio remains favorable, ideally above 1.5. This disciplined approach not only filters out weaker setups but also helps you scale in with greater confidence when all signals align. It's also crucial to understand that no matter how clean or promising a setup appears, no indicator is infallible. The market doesn't always behave in a trending manner, and there will be days when price action simply refuses to cooperate. In this alternate Tesla example, we saw a bullish breakout almost immediately after the first 30 minutes of market open. However, price quickly reversed, triggering a bearish breakout shortly after, only to pull back again, invalidating both moves. When you encounter back-to-back false breakouts like this, it's often a strong signal to take a step back. The market is clearly choppy, and further trades could expose you to unnecessary risk. That said, if your trading plan permits it, these conditions can also open the door to contrarian strategies. For instance, rather than attempting to ride a third breakout in the same direction, you might anticipate continued ranging behavior. In this case, once the third breakout failed and the candle closed back inside the range, we shifted our approach. Instead of entering another long, we treated the market as range-bound, setting our stop loss just above the initial buy-side target and aiming for the opposite sell-side take-profit. This is a practical way to adapt the indicator for sideways markets, helping you capitalize on mean reversion while managing risk in uncertain conditions. And that wraps up our deep dive into the opening range breakout indicator, a powerful tool designed to transform the chaos of market open into a structured, actionable framework for both trend and range-based strategies. You can load it up for free inside the LuxAlgo library at luxalgo.com/library. Looking to take your entries and exits to the next level? The Oscillator Matrix Toolkit we paired with the strategy today is built exactly for that, giving you real-time insights into money flow and momentum. It's also available risk-free for 30 days at luxalgo.com. Thanks for watching, trade smart, and we'll catch you in the next one. You've been analyzing structure wrong, and it's not your fault. For a while now, we've been deep in the trenches, testing every structure theory we could find, and what we discovered turned everything upside down. We've built something different, and today we're revealing a new indicator with a new approach, one that doesn't require a length input from the user, and it maps not 1, not 2, but 3 layers of structure, significantly minimizing lag and making it ideal for capturing the most subtle shifts between bull and bear markets before anyone sees it coming. If you've ever felt like you were always one step behind when analyzing market structure, strap in as we demo this new indicator. Most market structure tools force traders to decide upfront how deep or shallow their pivot detection should be. Too shallow, and the chart explodes into noise. Every minor jiggle crowns itself a swing, too deep, and the important shifts vanish until they are ancient history. This indicator sidesteps that dilemma by adopting an alternative method of detecting structure, where market structure is shaped by three distinct levels of swing points: short-term, intermediate, and long-term. This cascading logic means the indicator is constantly self-tuning, without ever requiring a pivot length input or any form of guidance from the user. And since this indicator relies solely on closed bars, yesterday's candle can never be revoked. What you see in the moment is what remains on the chart forever. Nothing repaints. Once added to your chart, you'll immediately see three distinct types of lines, each representing a different layer of market structure. The dotted line captures short-term structure. It's your earliest signal, ideal for spotting a trend continuation or potential reversal, before most indicators even flinch. Then comes the dashed line, marking an intermediate level shift. This serves as a more reliable confirmation, useful when you want to filter out noise and catch cleaner setups. Finally, the solid line represents long-term structure changes. It's the most significant signal, and by default, it's the only one labeled LTMSS, long-term market structure shift. At the swing points that define this structural change, you'll also notice subtle dot markers. These visually confirm the precise pivots behind each long-term shift. But here's where it gets powerful. Every layer is customizable. Jump into the settings and you'll find dedicated sections for short, intermediate, and long-term structures. Want labels for the other levels? You can turn them on. Prefer a different line style or color scheme? It's all adjustable. You can even choose to display a floating label for structure type, instead of just decoding by line style alone. In short, you're not just seeing structure, you're tailoring how it's shown, so it aligns perfectly with how you trade. And unlike most structure indicators that rely on static pivot counts, each layer in of structure in this indicator adapts dynamically, making it uniquely effective in chaotic or fast-moving markets. It doesn't wait for a fixed number of bars to confirm a swing. Instead, it reads the intent of price itself, allowing you to detect structure where other tools may get lost. In this example, we're using the Signals and Overlays toolkit to algorithmically determine directional bias, with the ML classifier enabled to rate each signal from 1 to 4, where 1s and 2s indicate a retracement, and 3s and 4s confirm trend continuation. In this case, a level 2 confirmation tells us the market is pulling back within an uptrend. As the candle colors shift from purple to red, we see momentum building, marking the transition from a weak trend to a strong one. But the real insight comes when we enable the pure price action structure overlay. All three layers of structure appear during the retracement, even before the candles transition to red for strong bearish confirmation. This gives us a roadmap. A short-term confirmation during the red candles could serve as the initial entry and our smallest position. Then, as the trend strengthens and structure shifts align with the directional bias, intermediate confirmation follows, offering a more solid entry. And finally, when the long-term structure breaks, it provides the strongest confirmation for scaling in further. And there, you have three positions entered all at different levels of confirmation. It's important to note that entries at the long-term level can sometimes face short retracements before continuation, which makes this layered, confirmation-based approach especially effective for managing risk while positioning with the broader trend. In this next example, we're focused on confirming a strong long-term trend. However, as mentioned earlier, significant long-term confirmations are often followed by deep retracements before the broader move resumes. So how do we handle entries following those market structure changes? Here, we've identified a long-term break of structure confirming bullish intent, and after some upside movement, we start to get a pullback. Instead of guessing where to enter, we can improve timing by identifying oversold conditions within the retracement using a tool like the RSI. Once price enters an oversold region while long-term structure remains intact, we begin looking for short-term structure confirmations. In this case, as price exits the oversold zone, we receive that short-term signal, prompting a small, early position. Because it's a lower-tier confirmation, we size conservatively and aim for nearby highs. What's crucial here is how that short-term confirmation offered an early opportunity to enter, rather than waiting for the intermediate confirmation, which, in this instance, arrived too late. It's a clear demonstration of why short-term signals shouldn't be overlooked. They can provide precision entries and improve risk-reward when used within the broader structural context. And that's just a glimpse of how this multi-layered structure tool can transform the way you read price action by giving you real-time clarity across short, intermediate, and long-term trends. We hope this walkthrough helped you understand how to use it effectively and how to adapt it to your own trading strategy. You can start using this tool completely free at luxalgo.com/library. And if you're looking to enhance your edge even further, the Signals and Overlays toolkit we featured in this video is also available to try, risk-free for 30 days at luxalgo.com. Thanks for watching, trade smart, and we'll see you in the next one.
When life plays dirty, Water Wipes, now 2 times stronger and even softer.
You're about to miss the most powerful breakout of the month, and you won't even see it coming. Why? Because it's hidden inside the one thing traders overlook the most, ranges. But what if you could flip that weakness into your secret weapon? In this video, we're going to show you a tool that does just that. And it doesn't just reveal consolidation zones. It maps them out for you in real time. Flags break out the moment they happen, giving you a serious edge, while others are still guessing. Let's get into it. Everyone talks about markets going up or down, but what often gets overlooked is how long they're doing either. When that movement stalls, when price doesn't push far in either direction, that's when consolidation develops. But these ranges aren't just dead zones, they're pressure cookers. Volume builds up, liquidity concentrates, and when that tension finally breaks, it's often with explosive force. And if that explosive breakout doesn't come immediately, price tends to revisit them, where they'll act as hotspots for taking profits, stop losses, and major trading decisions. Knowing this is exactly why we built the range detector. It automatically scans your chart, locks onto these high-value zones, and alerts you the moment a breakout begins. So you're not reacting late, you're prepared early. Once you apply the indicator to your chart, you'll immediately notice colored boxes. These are the detected ranges. Each range actually begins in the color blue. You'll also see a vertical line. This marks the exact candle where the range was detected, giving you a precise visual cue. From there, the high and low of the range are then projected forward, forming a boundary. When price breaks through, the range will shift colors between green for bullish breakouts and red for bearish ones. It is also worth noting that if price reverses after a breakout, but no new range has yet formed, the box will flip color to match the latest breakout direction. That means the final color you see on any past range always represents the last confirmed breakout before a new zone is detected. Inside the settings of the range detector, you'll find 3 core options that directly influence how ranges are identified on your chart. The first is minimum range length, which determines how many consecutive candles must remain within a tight, volatility-based envelope before a range is confirmed. Choosing a lower value, like 10 to 15, allows the indicator to detect quicker, shorter consolidations. Useful if you're aiming for more frequent signals. On the other hand, setting it higher, say between 30 to 50, focuses detection on longer, more significant pauses in price action, often leading to fewer but more powerful breakout opportunities. The second setting, range width, adjusts how wide the ranges appear, using volatility measured via ATR. Smaller values will tighten the range zones, capturing more compact consolidations, while larger values expand them to encompass broader market movements. Lastly, ATR length controls how volatility itself is measured. A shorter ATR period will make the tool more responsive to price shifts, while a longer period smooths the output, helping to filter out noise and highlight only the most stable, consistent volatility environments. Below that are just some styling options to give users more control over how the ranges and breakouts appear on the chart. And now that you have a strong understanding of how this indicator works, here are some examples of how you can use it in your trading to actually get the most out of your setups. In this setup, we can see that a range has been successfully detected. Now, rather than trading within the consolidation, which, as every seasoned trader knows, is often a recipe for getting chopped up, we wait for a decisive breakout to signal directional intent. In this case, price breaks down below the range, confirming a bearish move. What's crucial to understand here is that the range itself now represents a high-volume zone, a region where many traders likely got trapped. This makes it a prime area for liquidity grabs on any pullback. However, simply entering on a retest isn't enough. To increase precision, we want to align this pullback with a clear imbalance in price. To do that, we'll turn to the Price Action Concepts toolkit and enable the Fair Value Gap Imbalance setting. Then set that to a higher time frame, such as the 4-hour. In this example, we spot an imbalance sitting right at the low of the breakout, an ideal alignment. But note that even if that imbalance were slightly higher, it could still be valid. What's important for a bearish setup is that the imbalance doesn't sit above the midpoint of the range. For bullish setups, you'd want the opposite. The imbalance should not fall below the midpoint. From here, we simply wait for price to retest and reject this imbalance, as it does in this case. That's our entry trigger. Stops go just above the imbalance. and we aim for a clean 1 to 3 risk to reward ratio. Now, as mentioned earlier, once a breakout occurs, the detected range high and low continue to plot on the chart until a new range forms. This persistent visual reference makes these zones valuable for setting both take profit and stop loss levels. In this example, we see a bullish breakout. Now, price often breaks out, then retests the range's high or midpoint before continuing its move, which is similar to what we did in the first example with the imbalance confluence. But this time we have confirmation, and we also see a clear uptrend structure forming, which gives us added confluence. Now, instead of relying on a fixed risk-to-reward ratio, we can identify our target more dynamically. One smart method is to look for the most recent consolidation zone above the current price. Since it previously acted as a range, there's a strong likelihood it will serve as resistance or another pause point again. That makes it an ideal level to aim for your take profit. Now, that's just a glimpse of how the range detector can level up your market analysis. We hope this walkthrough gave you a solid understanding of how it works and how to integrate it into your own strategy. You can start using the range detector right now, completely free, at Lux/library. And if you want to take things further, the price action concepts toolkit we used in this video is also available for you to explore, risk-free for 30 days at luxalgo.com. Thanks for tuning in. Until next time, trade smart, and we'll see you in the next one. How many times have you seen this structure? The market creates a low and then a high, and you're advised to wait for a pullback to enter? But let's be honest, we've all entered trades at what seemed like the perfect entry price, only to watch the market stop us out. Today, we're providing a solution for traders looking to perfectly time their entries between these ranges. This indicator doesn't just detect ranges, it clearly plots entry points, take profit, and stop loss levels for you, all in real time. And the best part? We're giving it away completely free. So, if you want access to this indicator, stick around. We'll show you exactly how it works and how you can get your hands on it. Let's dive in. First, let's clarify what defines a range, as traders often confuse ranges with consolidation. A range is defined by two significant swing points, a high and a low. As long as the price stays between these points without breaking either, the market remains within that range. Consolidation, however, typically occurs after forming higher lows or lower highs within the range, indicating that the market is struggling to break out and losing momentum. This indicator specifically targets ranges, not consolidation patterns. When using the indicator, you'll notice clear red and green lines on your chart. These lines indicate the high, low, and midpoint of the detected range. The midpoint is critical. This is the level we use to trigger our trades. If the automatically detected ranges don't match your preferences, you can easily customize them. Simply head into the settings and adjust the pivot length. Default is 20. This setting determines that a valid swing high or low must have at least 20 candles on either side that are lower for highs or higher for lows. Once a range is established, the indicator waits patiently for the price to revisit the dashed midpoint line. When it does, that's your trade trigger. A quick note. Sometimes multiple ranges can appear on your chart, which may clutter your view. To address this, we've added a threshold setting that filters out less significant ranges, ensuring your chart remains clear and easy to analyze. Also worth noting, if you see ranges but not trades, it's likely because your take profit and stop loss levels have overlapped. You can enable overlap trades in the settings, which is off by default, to visualize these potential setups. The green area on your chart represents your take profit, while the red area indicates your stop loss. These levels are dynamic, calculated using the average true range to adapt to market volatility. This ensures your trade levels remain realistic, sometimes wider or tighter depending on current market conditions. And you'll also notice that it does not matter if price breaks outside of the range before retracing to the 50% point, effectively allowing you to also capture entries based on the pullback of false breakouts. Now, while this indicator can detect trade setups based on this structure, as usual, as we would advise, never rely on indicators blindly, and always combine them with your analysis to get the most out of them. So here are two examples of how you can use this indicator to get the most out of it. In this example, we can see the market was trending higher before forming a clear range high and low, which has since turned into a consolidation zone. By marking those levels, it's easy to spot what looks like a classic breakout. But then, price snaps right back into the range. Now, instead of guessing where to re-enter, we enable our indicator, and instantly, it detects the exact same range. From there, we simply wait for price to pull back to the 50% midpoint. which becomes our precise trade entry. Normally, you might set your stop loss at the candle low or just beneath the range, but the indicator has detected increased volatility and instead automatically places the stop loss well below the range using ATR-based logic. And check this out, price does retrace back to the low. If you had placed a traditional stop loss, you'd be stopped out. But thanks to the dynamic ATR calculation, the trade stays alive, and our take profit still offers a 1 to 2 risk to reward setup. Here's another example. This time, we're combining the range indicator with the reversal zones from the Signals and Overlays toolkit. In this example, we can see new lows being created, and the upper reversal zones aren't even getting tested, a strong sign we're now trending downward. Now, the market bounces perfectly from the lower reversal zone and pulls back to the 50% midpoint, and that becomes our ideal entry. From there, you can use either the ATR-based take profit levels from the indicator or the lower reversal zone lows as your profit targets. Clean analysis, smarter execution. This indicator is called the Range Average Retest Model, and you can access it right now through the LuxAlgo library at luxalgo.com. You can also get a 30-day trial of the Signals and Overlays toolkit, so you can see for yourself how powerful this combo really is. Thanks for watching. We hope you found this valuable, and we'll catch you in the next one. It seems that every week a new price action strategy pops up. Some new trend lines, liquidity grabs, Fibonacci tweaks, you name it. And let's be real, it can get overwhelming fast. But what if you had a toolkit that could cut through this noise, giving you the most critical concepts in a powerful way? Well, that's exactly why we built the Price Action Concepts Toolkit. It's not just another trading tool, it's your all-in-one system for decoding price action in real time. And by the end of this video, you'll see exactly how it works and why traders at every level are making it a must-have. Let's dive in. At its core, trading is all about price action, the movement of price over time. No matter the strategy, volume footprint analysis, TPO charts, or any other method for that matter, price action is the common thread that ties everything together. Yet mastering it can feel elusive. That's where the LuxAlgo's Price Action Concepts Toolkit comes in. It takes complex market dynamics and simplifies them into clear, actionable insights. And to do this, we start with market structure. Market structure is the backbone of price action analysis. It is a simple and clear way to identify both macro and micro trends. In order for us to simplify this for traders, the Price Action Concepts Toolkit automatically plots key labels at the most important turning points in price. So let's break down how that works. An uptrend forms when the market creates higher highs and higher lows. When a higher low is broken, the toolkit plots a bearish change of character label, meaning we might be entering a bear market. Likewise, in a downtrend, when a lower high is broken, a bullish change of character appears, hinting at a possible bullish market. However, majority of the time, the trend doesn't reverse and instead continues in one direction, and that's where a break of structure label is formed. This confirms that the market is following through with the initial trend shift and is often used as a confirmation to get into trades. So to keep things visually intuitive, these labels are color-coded based on the anticipated direction of the structure change. But if you would like to take it a step further, you can also enable color candles. This will shade your chart candles based on the structure labels. Green candles for a bullish trend, and red candles for a bearish trend. So that's it for structure, right?
You serious?
You see, an experienced trader knows that trends exist within trends. And this can cause you to enter a trade after a change of character or break of structure, only for it to turn out to be a retracement within a much larger move. So to help traders tackle this, we provide two versions of market structure. The swing structure is plotted with solid lines and accounts for more data, highlighting major macro moves, while internal structure identified by dashed lines uses less data and captures smaller structure fluctuations within the larger trend. By using both versions, you can confidently assess market structure and ensure your decisions to enter a trade are aligned with the broader market direction. Once we had the market structure implemented, it was time to tackle the next crucial element, support and resistance levels. These are key price zones where price is expected to react, making them essential for traders when setting stop losses or identifying target areas. Nearly every trader uses this concept in some form, with the most common approach being key swing points as reference levels. But we decided to take a different approach. Based on our research, the most effective and widely used method for detecting support and resistance levels is through order blocks. These are zones where market orders accumulate before a significant move, acting as hotspots of institutional activity. However, we didn't stop at just regular order blocks. We introduced volumetric order blocks. This enhancement not only highlights where orders are clustering, but also provides insight into buying and selling activity at those levels. Additionally, We gave users the flexibility to adjust the time frame for these levels and even detect breaker blocks, adding another layer of market intelligence. This has become one of the most popular features in our toolkit. For a deeper dive into how it was developed, check out our dedicated video on order blocks. And next, we dove into liquidity concepts. Liquidity is the heartbeat of the market. It refers to how easily a market can be bought or sold. After all, trading isn't possible without someone on the other end willing to buy or sell. So, market levels of high liquidity often end up being where traders' stop losses are placed. This creates prime opportunities for market makers. The Price Action Concepts Toolkit brings liquidity to life. Every feature within this category is built with the intent of how users can make trading decisions at these liquidity zones, because trading isn't just about identifying liquidity. It's about understanding how the market reacts to it. Let's break down the features available. First, we have liquidity trend lines. These dynamic zones adapt to real-time liquidity readings. Zones will only appear when market participants have actively sought liquidity there. Traders use these areas as reaction points, either to continue an existing trend or wait for a break to spot potential reversals. And then we have pattern detection. The toolkit identifies a number of bullish and bearish chart patterns in real time. To make decision-making easier, there is also a dashboard displaying the name and type of pattern detected. For instance, if a descending triangle appears, the first thing to note is that this is a bearish pattern. It signals sellers attempting to push prices lower. A trigger for this setup is waiting for the support to break and for the price to start closing below that zone before considering a trade. We also have the equal highs and lows feature, which highlights market areas that are at relatively the same level. These are most significant when they occur in well-established and clear uptrends or downtrends because they can mark the very top or bottom of the market. Once one is detected, the idea is to wait and see if it is followed by a market structure shift in the opposite direction of that trend, making them perfect for an early warning sign of a reversal. And finally, for this category, we have liquidity grabs. This is an advanced way of potentially identifying market manipulation. This feature first identifies liquidity zones and then detects any unusual price action within those areas. If such activity is detected, a bullish liquidity grab appears in blue, while a bearish grab appears in red. This often indicates that the market could start moving strongly in either direction of the grab. If both occur in relatively the same area, it could indicate a higher likelihood of a ranging market, in which case you should avoid trend trading strategies. Now that we have a solid understanding of liquidity concepts, it's time to tackle another crucial category: imbalances. These often occur as price moves toward or away from liquidity areas, creating gaps where supply and demand becomes unevenly distributed. These imbalances in the market will need to be corrected, and as such, they can act like magnets, pulling price back to fill these voids. So, recognizing the importance of imbalances, we didn't just implement one. We integrated 5 of the most significant types. This includes 3 major types of fair value gaps: volume imbalances and opening gaps. Simply select the ones you want, and they'll be instantly highlighted on your chart. As mentioned earlier, price reacts to these zones much like a magnet to metal, making them ideal levels to set targets or to place your stop loss. If being used as an entry method, traders will often wait for a reaction off these key levels before executing the trade. Many of these trades will take place between surplus and deficit zones. To navigate these areas effectively, you need a way to identify these areas. This is where the premium and discount feature comes in. The premium and discount tool simplifies this by dividing the market into overbought, premium, and oversold, discount areas, giving you a clear visual representation of whether price is trading at a favorable level for entry or exit. On top of this feature, there are many psychological levels in trading that are widely used in price action strategies. Traders can enable key price levels such as Monday's high and low, previous monthly levels, and other significant reference points. Additionally, we've recently introduced a Fibonacci tool, but we took it a step further than a standard implementation. Instead of simply plotting fixed retracements, we allow traders to anchor Fibonacci levels between major points on the chart, using almost any feature within the toolkit. Whether you want Fibonacci levels drawn from the premium and discount zones, or between the high and low of an imbalance, the possibilities are endless. So now that we've explored all the features of the price action concepts, let's talk about the glue that ties everything together: alerts. Staying ahead in the market is all about timing, and we've made sure our alert system covers every angle to keep you informed when it matters most. The toolkit offers 4 types of alerts: pre-built alerts, ready to go for a quick setup; any alert function calls, perfect for combining multiple features into a single customizable alert; custom alert creators, offers more flexibility in combining alerts and introduces the ability to set alerts based on sequences. The all-new alert scripting feature allows you to build alerts from the ground up with ultimate flexibility, perfect for advanced users. Because alerts are such a game changer, we've dedicated full-length videos to breaking down each alert type in detail, showing you exactly how to set them up and optimize them for your trading strategy. So no matter what kind of trader you are, you'll always be in the loop and ready to act. Now you can see that what sets the Price Action Concepts Toolkit apart is that this isn't just a collection of features. It's a thoughtfully designed system that simplifies your analysis and helps you trade more effectively, from identifying market structure to spotting liquidity zones, imbalances, and key levels. Everything is designed to give you a comprehensive view of the market. You can access this toolkit directly on our website at luxalgo.com. It's included in all three of our plans: Essential, Premium, and Ultimate. If you opt for the Ultimate plan, you unlock even more powerful features. You'll gain access to the Price Action Concepts Backtester, allowing you to fully backtest every feature within this toolkit, and exclusive access to the first-of-its-kind AI backtesting assistant, an intelligent platform that understands the Price Action Concepts Toolkit inside and out, helping you uncover the most profitable strategies this toolkit has to offer by simply asking questions within the interface. We hope you enjoyed this video and learned something new. Thank you for watching, and until next time. This isn't your ordinary support and resistance indicator. This script is an all-in-one tool that includes just about everything you need to analyze major and minor levels in the market. From signals showing when the price breaks a major level, retest that level, and even multi-time frame features. It's not only the perfect tool if you're a new or experienced trader, but we also released it for free. Anyone on TradingView can get access, and today we break down exactly how it works and give some killer examples that can easily improve your trading. When you add this indicator to your chart, it might seem a bit overwhelming, but it's really not as complicated as it looks. The green and red areas are the support and resistance levels, and these labels that are plotted in real time tells you what the price is doing. For example, if we hover over this B label, it tells you that this was a breakout, and the R label shows that the price retested that breakout area, and the T show that price is testing an unbroken level. One way we could use this is if we're trading between a support and resistance level, and you happen to get a T label. This is perfect for reversal trades, where you can set stops above or below the level and target the opposite side of the range. But if you don't want to risk trading inside the consolidation, you can simply wait for a B label when price breaks out from the channel. Now, if you want to take a trade on this breakout, you might end up with an extremely large stop loss, seeing as you'll need to set stops above this breakout candle. So what you can do instead is wait for a retest of that breakout level, which is when the R label is created. Now you can set stops above that zone and enjoy the ride down. Also, you see these blue and orange zones on the chart? Occasionally, manipulation of price can happen. So these are detected manipulation zones that the indicator will try to locate. If the price strongly rejects from these levels, a label with no letter will be shown. But if you hover over it, you'll see that it detected a rejection with high volume. Similar to liquidity grabs, they are great for reversals. Now, the best part about this indicator is that with all these features, you can set it to any time frame you want. I can be on a 5 minutes chart and see the 4-hour levels. Don't forget to comment and let us know what indicators or features to cover in our next video. And to get this indicator, simply go to luxalgo.com/library and search support and resistance MTF to get it for free today. Thank you for watching, and until next time.
What's up, guys? In this video, we're covering the brand new Lux Algo Premium price action concepts that just released for all of our premium users. And this is a super long awaited update, and there's a lot to cover here, so let's just get right into it. So here we have a basic diagram of the market structure labeling within the indicator. A BOS label is representing a break of structure where price is just breaking the recent highs. And you can see that these can also be bullish or they can be bearish. Then we have change of character labels. Now, a regular bullish chalk is when price breaks the recent low, usually making a bearish BOS, and then directly breaks both the recent low and high, forming a regular chalk and indicating a possible reversal. However, in the price action concepts indicator we're about to fully cover here, we have added the ability for the indicator to also detect when the market forms a higher low first and then breaks the bearish structure, which is marked as chalk plus, meaning it's just a more confirmed change of character or a better reversal signal. We can also see a solid line with a larger BOS label in the middle of the diagram here, and this label just demonstrates a break of structure taking into account the longer term price action on the chart. And yes, all of these labels are generated in real time. And no, there is absolutely no repainting of these labels in the indicator. Now, let's get right into some examples of how you could use this thing in real time. And this settings menu is extremely big, and there's a ton of customization you can do for price action trading. But for the sake of the video, we're going to keep this all pretty brief. So we can immediately see that the order blocks have volume metrics to find better points of interest in the market. And these were heavily upgraded to be a lot cleaner, avoid overlapping order blocks, and also to just give you an experience that's never been done before by showing actual volume metrics plus buy and sell volume bars in between the actual order blocks. And we can also see the swing and internal market structure we covered in the diagram earlier, which can give us indications of longer and shorter term reversals. And displayed on the chart, you can see these brand new trendline liquidity zones can help us find more likely impulses or breakouts within trends. And the big thing to note here before we cover the entire indicator is that this is all pretty much entirely based on price action, and more specifically, market structure. So this isn't really a generic technical indicator, and it really gives straight to the point useful information. For example here, using the metrics in the order blocks, we can find way better points of interest for entries, used in confluence with the overall market structure. And we could also see it's overall bullish with the swing chalk that activated earlier. Now, due to price closing below the middle order block at 24.77%, we saw it was mitigated or removed, and then price revisited liquidity above the trendline zone, leading us to the first order block as our target. And something to note here with these is that you will notice the percentage values adjust as order blocks are touched or mitigated, all aligning with the correct volume detected when these order blocks were established. So here we have even more features enabled from within the settings of the price action concepts indicator, including chart pattern liquidity, which is now drastically improved and has been made a lot easier to find detected patterns. Fair value gaps, which is just one of the many imbalance concepts included in this indicator. Liquidity grabs that are shown in real time, as well as the primary market structure and order blocks that we just went through earlier. And by activating more features like this, you can get a better interpretation of where liquidity is resting in the market, which allows you to develop trading plans a whole lot easier. And one of the biggest features here we can see is the liquidity grabs, which are highlighted as blue and red boxes on the wicks during specific price action that indicates the market has made an impulse to take out resting liquidity above or below. And we can also notice in this trade, which yes, is a hindsight example here, how price often moves to the areas of the most liquidity, even if it's generally unexpected. Wicks to take out orders above and potentially trap traders are much more noticeable with these features we included being used all together. Even more features we can enable here include balanced price range, which is another imbalance method that's similar to fair value gaps, market structure candle coloring, accumulation and distribution zones, premium and discount zones, the percentage next to each area, a multi-time frame dashboard to show you reversals on relevant time frames, as well as many new previous highs and lows displayed on the chart all automatically. And the colored candles here use detailed market structure analysis, allowing you to visualize when trends are still developing or are actually established. And by utilizing features alongside this market structure analysis, such as noticing price revisiting the previous daily low level, plus the equilibrium acting as resistance, plus a balanced price range below the price, the discount zone below with the high 72% metric, and the multi-time frame dashboard displaying an overall bearish structure, you can instantly gain a deeper interpretation of price action, make highly confluent trading plans while avoiding classical technical indicators, and use traditional retail trading concepts such as chart patterns or trend lines to their advantage in finding logical areas of liquidity and points of interest in the market. So guys, we're super excited for you to get access to this update. And a couple things to mention is that it's just directly replacing the previous SR and patterns premium indicator you already had access to. So if you're a premium user of LuxAlgo, you just need to refresh your browser or TradingView mobile app, remove that indicator from your chart, go to your invite-only scripts, and then add the LuxAlgo Premium price action concepts to get access to it. And of course, just to mention too, you can probably tell that this is a lot more detailed and more useful than our viral smart money concepts indicator that's all over YouTube and TradingView right now. So you can treat that script as a light version of this indicator, basically. And there's a lot more coming to LuxAlgo soon, and we're expanding faster than ever. So if you haven't already got access to Premium, we'll leave all the links that you need down below in the description. And on that note, I hope you all found this helpful. Let me know what you think in the comments down below or in our Discord, and I'll see you guys in the next video.
The ATS used by some of the fastest growing companies in the world. Loved by over 150,000 recruiters, TeamTailor is the all-in-one recruitment software that makes your team and your candidates happier, letting you recruit faster without compromising your quality of hire. Evaluating candidates to find the right hire has never been easier. Collaborate closer with your team. Share candidate cards, add notes, and more. Communicate with candidates directly, ask questions, book interviews, and send personal messages. Evaluate, collaborate, and communicate, all in one place with TeamTailor.
Pronamel Active Shield does help protect against erosion and cavities. It gives 2 times stronger enamel defense and 24-hour cavity protection. What I liked about Pronamel Active Shield is the science is there.
Indicator signals do not work, and you cannot follow signals blindly, a sentiment widely shared within the trading community. But what if I told you that only 50% of that statement is true, and there is actually a way of using indicators and their signals that could certainly provide you with an edge over everyone else? To understand, we must first learn why traders fail to use signals properly by looking at how signals are traditionally provided. Typically, when indicator signals are created, they show a buy or sell label, implying that where a buy label is plotted, traders should execute a buy position, or if it's a sell label, execute a sell position. This often causes traders to follow signals blindly, possibly leading to a path of following buy and sell signals without any form of confluence, which simply does not work. So knowing this, in our signals and overlays system, we provided 2 types of signal modes: confirmation and contrarian mode. The confirmation mode was designed for traders who like to take advantage of trend trading methodologies, and as such, would be most useful in a trending market. Whereas the contrarian mode, as the name suggests, was designed with contrarian traders in mind who wanted to take advantage of mean reversion strategies and would be most helpful in highly volatile and ranging markets. Each signal type offers a normal and strong rating. Strong signals are designed to align with the market trend when using confirmation mode, while strong signals within the contrarian mode indicates a high probability of reversal. These signals are not designed to be followed blindly, and as such, there are no explicit buy or sell labels on these signals, as they should be used alongside your strategy to confirm or invalidate setups. Now, although these signals are helpful, we understood that traders would need even deeper insights to make more informed decisions. So to do this, we started exploring possible methods of integrating machine learning directly into the toolkit. We decided the best implementation would be through an adaptive threshold classifier. providing a brand new evaluation system for the signals never seen before. Later in this video, we'll be showing you exactly how this is different from the regular signal mode, how it rates signals more accurately, and explore real trading examples showing you how to use this new system to significantly improve your analysis. This feature can be enabled in the settings menu of the Signals and Overlays indicator by checking the AI signal classifier. The system will then automatically classify existing signals, providing additional details to the user. Confirmation signals are rated from 1 to 4, where lower values 1 and 2 may indicate early signs of a reversal or retracement. These ratings are more likely to appear in the opposing direction of already established trends, whereas higher values, 3 and 4, suggest the likelihood of a continuation of the already established trend. When using the contrarian mode, lower numbers point to an emerging trend with a smaller chance of a significant reversal, while higher numbers 3 and 4 are generally associated with more established trends and have a greater possibility of a major trend reversal. The AI signal classifier is designed to provide traders with actionable insights, enabling users to make better trading decisions beyond what is possible with the regular rating system. It's important to remember that these labels should not be simply interpreted as 1 is weak and 4 is strong. It really depends on the context